Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, July 16th, 2019. Lovely to see all of our live participants with us today, so please you could join us. Hope everyone's doing well and feeling fine and raring to roll with this week's classes, as we always have lots of fun and much to cover. And also going to be discussing our exciting and thrilling MPA PE4 software. How about that? Market Price Anticipator Premium Edition 4.0. How about that? So everyone's excited, I hope. And we're going to go over some of that today and continue to do so. Great. Thank you. Appreciate that. All right. And hope everyone had a very nice weekend. And now we're all ready to roll. So let's go ahead and jump right on in and get going with today's session, okay? So please sit back, relax, and enjoy. And I'll turn it over to Gary and we'll begin. Thank you so much.
Good morning, everyone. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frame aligns prior to trading with the Market Price Anticipator Premium Edition 4 version 4.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, before we pick up with the euro and we do our normal GMF market review, let's go through some technical review of installing the new 4.0. So the first thing we want to do is I want to make certain everyone has the correct check boxes for the software to function properly. So what we first do is we're going to go in the platform where you're running the 4.0. You want to go up to your File menu up here, and across there you'll see File, View, Insert, Charts, Tools. So go to the Tools menu. When I click on Tools, you'll see there's an Options. Open up Options, and when I do that, I'm interested in a few different tabs within this section. The first one and the most important one is the Expert Advisor. So when I click Expert Advisor, and please do this along the way, Bill, Carl, Charles, everyone, go ahead and follow along because I want to make certain all these boxes are checked for you. So once you go into Expert Advisor, so let's start from the beginning. You go up in the platform where the 4.0 is installed. You go up to the header up here and you go to Tools, then Options. And under the Options box here we have multiple tabs. The first one is Expert Advisors. When I click that, I want to make certain that this top box right here says Allow Automated Trading is checked. When you check that box, it illuminates and allows you to check the boxes below. And the ones I want checked is the first two. So we have Allow Automated Trading. Then we have Disable Auto Trading when the account has changed. We want to disable auto trading when the profile has changed. You want to make certain that we do not disable auto trading when chart symbols or period has changed, so that is unchecked. And then most important of all is Allow DLL imports. That must be checked. So if you're looking at the screen, the first two outer check boxes, the first two should be checked, the third should not. And on the indented boxes here, the first two should be checked, the third should not. So make certain that is the case. If anything is different, uncheck boxes that should not be checked and check the ones that should, so yours matches just like this, and you'll be good to go. The second tab that I'm interested in this area is under Objects, and this is a personal preference. You do not need to do this one in order for the software to function. This is just a personal preference, and in here under Objects, my preference is to select Object by single mouse click. When that is checked, as you see mine is, that means whenever I want to move anything on my chart, like a support line, resistance line, a symbol, a trend line, I simply single click versus double click, and that's how you decide here. Now again, it doesn't matter what you select, it's just your personal preference. Mine is to have a single click, so I do check that. The last box is under Events. Events. When I click under Events, it's important that this Enable box is checked. But as you go through the different events and different type of alerts, I tend to turn them all off except the first two. So how do I do that? When I find one of these, if you double click in here, you'll notice the little red X disappears. I'll double click News, it'll disappear. I'll double click OK, it'll disappear. So what I'd like to do here is make certain you turn all of these off minus the first two. Now again, this step does not affect the functionality of the software like the Expert Advisors does. That tab must be checked the way we discussed so the Expert Advisors and indicators can work properly. Now this Enable here and these different types of alerts, that's just if you check and say everyone is like the first two with no red X here, and they're all like that, then that means every time something comes across with a news media through this platform or any alert, you're going to hear the ding, da, da, ding, 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 and it's constantly going to make a lot of dings and noises. Well, I tend to turn everything off minus the connect and disconnect. That way it doesn't disturb the household, etc., because it can get kind of loud after all these alerts are on, and every time something happens, you hear alerts frequently. So that's all you need to do with that. And then you say OK. Once you've established that, make certain that every platform, so in my case, I'm running 4.0 on about 6 or 8 different platforms for teaching purposes, etc., but I just need to make certain that I go in every platform and do the same thing. So for example, in this platform, we do the same thing. This is just a different platform. Just to review, you're going to go to the Tools menu, then open up Options, and then we're going to navigate to 3 different tabs. The most important tab is the Expert Advisor tab, and again, it needs to match. The first box is checked, the first 2 indented boxes below that is checked, and then this second outer box is checked. So if you look at this as 2 different columns, you got a left column here and an indented column. And the first column, the left column, you should have the first 2 boxes checked and not the third. And on the indented boxes, we need the first 2 checked and not the third. Once that is done, again, I normally go to my objects and check this, and then I go to my events and leave this enabled like it comes preset, but I turn off these other alerts in here and only leave the first 2. Once that's done, the system is ready to go and run your software. Now, depending on when you installed the new 4.0, one installer had a 395 software uninstaller included, and one of them did not. So I'm not certain at what point you installed, or you did in class or you did one since then, but we want to verify that the installer either removed all the old files, or we're personally going to show you how to manually remove them in case you had an older version installed or just have some specialized templates that you created that are looking for old indicators and Expert Advisors. So this step includes going to File, Open Data folder. So whatever platform, again, you're running the software, the 4.0, you want to go to File, Open Data folder. And once I open the data folder, you're going to see this little dialog box appears. There are several areas I want you to check first. Now, regarding the installation of this current 4.0, you go into MQL4, and once I open that box, there's several more folders, and the first one we're going to go to is experts. Experts. So what was that, Gary? You go to File, Open Data folder, then you go to MQL4 folder, and now we're into experts. And within the experts, I want to make certain that these are the latest and greatest. So you should see the it's actually 6 MPA Premium Edition EX4 files in here. I'll move this over a little bit so we can see it all. But these 6 MPA indicators that are sitting here, look across under the date modified, and yours should say the same, 7/12/2019 at 4:05 p.m. So Emil, if I see one here that says a Slice of Heaven Finder 3, a Slice of Heaven Finder 4, a Scanner 3, a Scanner 4, if any of that's in there, you want to highlight the 3s and remove them. Or if you've installed the 4.0 and yours doesn't say 7/12/2019 at 4:05 p.m., you have one that's 7/11 or earlier time, then let's reinstall, go to the members area and reinstall. So just to make sure you have the latest and the greatest here. So the first one was the experts. We can see there are 7/12/2019 is the date at 4:05 p.m. And there's no Premium Edition 3 scan or anything else in here. They've been removed. If yours is different and you see the 3 Premium Edition 3 scanner or the Slice of Heaven Finder 3, please remove those. And if you see these look the same but the dates are different, then just simply reinstall the software and it'll overwrite these to make sure you have the latest ones. Well, I'm going to give you a heads up. I'm in the process with this new software. It's so highly functional and optimized that in the past when we used our trade triggers, if I put that on say 20 charts, it would seize the platform from running because it was so intensive calculation and intensive heavy that it would force MetaTrader platform to start seizing up. It was too much to handle for the MetaTrader 4 platform. Well, the new updated, streamlined, and optimized, we're now able to run the hook and cross trade triggers, which is the new one, that I can run that on several charts. So Emil, what that means is I'm not saying, hey Emil, go ahead and open up a platform and open 100 charts and put hook and cross trade triggers on every one of them. Of course not. A lot of variables in there. How new is your computer? What type of processor do you have? How much memory do you have? So there's a lot of variables in there. But again, the newly revised version, that's why I'll make certain that when I add the hook and cross trade triggers, it's putting the correct one on. All right, so we're good there with the experts. You see the dates. Anything else that's in there that is not representative, so like the old 3 version scanner or the 3 Slice of Heaven Finder, those need to be removed. And if any reason that these in here are written the same, but the date and time is different, like 7/11, then you just need to reinstall the software from the members area. All right, next up, you just go back up an arrow. And now from the experts folder, we're going to go into the indicators folder. Indicators folder. And once I open up the indicators folder, you're going to scroll down to the M's for market price anticipator. And the same thing here. You should have a plethora of MPA indicators in this folder. And the date should match 7/12/2019, 4:05 p.m. So down here at the MPA trade triggers, if you have an old one that's MPA trade trigger, no S, and the date is off, make sure you highlight that and delete it. This one, we do not have any of the older dated indicators. They're all the current date of 7/12/2019. Not every indicator in here we're worried about, just the MPA ones, right? So you need to go to the MPA section and make sure everyone that starts with MPA all the way down to the last one, all of the 7/12/2019, 4:05 p.m. date. Okay? And if you have that in there, you're good. If you see any other ones that are old, make sure you just highlight it and click your delete button and you're good to go. Lastly, you need to go back up an arrow, and we're back to the same MQL4. Well, we're going to go up arrow one more time to where I see the MQL4 folder, and below that we notice there's one that's called templates. Templates. Now when I open up the templates folder, there is a plethora of new and exciting MPA 4.0 templates. Not every template has the 4.0 written on it. I didn't want to say MPA 4.0 basic, 4.0, 4.0. So I just left these the same. And by having the installer, anytime it's the same name, like MPA Black or these exact same names, the installer overwrites these older files. So even if I installed and it says 711 here, as soon as I go and install the latest version, it will overwrite all of these files, MPA files, to the 7/12/2019 date, and you'll notice the times are a little bit different in this one. They're not exactly all 405, but close enough as I was processing the programmer and I were going through making sure all these were done correctly. All right, so this is critical. So here, if for some reason the installer, and you see a lot of MPA trade management PE3s instead of PE4s. Anytime you see PE3s and the installer did not pull those old ones out, let's make sure you would highlight. So let's just pretend in mine this said PE3, 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 PE3 along with these PE4s. What would I do? I would highlight all the ones that are PE3s. And again, in this instance, it's PE4s, but it's for illustration purposes. And if these were the PE3s and I had the PE4s there, and you go, yeah, I see the old ones in here, Gary, what do I do? All you got to do is highlight them and then delete them. Okay? Now, once I would highlight and delete anything, the platform I'm in is not going to know it's deleted until after you close the program or the platform and reopen. So what I don't want you to do is go through this, delete the ones you want, and then forget to close the platform and reopen, because if you don't shut it down and reopen, then it doesn't realize that these have been deleted. So as soon as I make my edits and delete anything that shouldn't be there, aka old 3.0 templates that are calling up older 3. Indicators and profit, anything 3 related needs to be removed. All right? So once that's done, you're good to go. And what is the last thing? You would close your MetaTrader platform, reopen, you're good to go. Now, everything's installed, we're good to go, and we know how to check it. So let's pick up with our euro, and we could do some of the market review, and then I'm going to come back towards the end, and we're going to talk about some of the exciting components. And as we move through this week, next week, the subsequent weeks, we're going to cover each component of the new 4.0 and take time to discuss why we've made changes and any other new things to look out for. All right, so as far as the euro that was been stair-stepping lower, we're getting back to oversold, and we talked about this needing to start bouncing and looking for a bounce toward the upside. The question was at the time, well, if this X wave is over, is it truly going up in wave Y, or is this part of that wave 2 that's already over and wave 3 that's unfolding here, and we're in the early stages of highs, lows, lower highs, lower lows, lower highs, lower lows as we stair step down in this wave 3. Well, again, nothing has really changed, because yes, the euro did start to bounce and is turning back over, but it's possible that we still could go a little bit lower in what? Actually make a new low down here, which is this 111.11, and still ultimately reverse back up and make a move back toward our previous high at around 114. Well, if this is an X that's turning into an expanded flat, then we would obviously go and could go at least 90% of the original up move, and could go beyond 100%, which means we could actually make a new low below 111.11 and still reverse back up. Well, why am I so hesitant to think that the euro could possibly just be in this downtrend heading in wave 3? Well, that's where the line of progression comes into play. So as we go to the software, we can see why in this previous trade that we got some profits is about to get pipped out. Emil, this is a sign that I'm just looking at the indicator right now that's saying this is definitely going to get stopped out because this is already turning and hooking down, which means the probability over the next couple of days the daily finishes the down cycle is good. So I can either just let this go down another 6 pips and pip me out, or we can just go right now and close this trade because it's inevitably going to get stopped out based on a daily engaging and disengaging. And what happens when you engage, disengage? The likelihood we go back to this low and go a little bit lower is good. So we just click to close it.
Great job. We're very proud of you here at GPA Trading Services. We wish you much continued success. Bravo.
Okay, so this is inevitably probably going to come down, so I just locked in a few more pips of profit. Emil, this is what we talk about frequently when you start to see, well, the daily could possibly hook and go all the way to overbought right now. But because we recently engaged, disengaged, and were re-engaging at the time that rally started, it's pretty obvious that, remember our rule, that when we get a hook and a cross on a weekly, the daily highest probability will make the cycle towards oversold. Will make the cycle towards oversold. So Rodney, being the new student, we're going to go in and do this for you. I also have a new educational module looking at what is the hook and cross strategy, but you get an added bonus, Rodney, because I'm going to do it right now for you. You're going to hear hook and cross strategy. That's all you need. Let everything else you've ever learned about trading, let it go. Because we're going to incorporate the proper methodologies and how this system is the last system you'll ever need.
Alexa, cancel.
And while we're in the process of doing that, the first thing is the hook and cross strategy. Why is that so important? And what exactly is the hook and cross strategy? The hook and cross strategy is based on the market price anticipator software. And it includes these two indicators. Actually, it's more than two because there are a couple here and a couple here, but based on these indicators. So what is it? The hook stands for the market price indicator, right? Market price anticipator, price action indicator, PAI, price action indicator. Say that one more time. MPA, market price anticipator, and what is this particular indicator? It is the market price indicator. And the next one here says MPA, and it is the trend momentum. Well, the trend momentum, we have two of them. There's a trend momentum and a trend momentum 2. Trend momentum is the green and red, the one I'm highlighting now, and the trend momentum 2 is this light blue and aqua. They go tandem together and they're ideal together, and we'll get into all that later, but what is the hook and cross? It's particularly focusing on the PAI and the trend momentum cross. Primarily trend momentum 1, but trend momentum 2 does come into play. So when I first look for it, what am I trying to accomplish? I want the time frames to align where I see the price action indicator either in oversold territory along with the trend momentum, and in most cases, in a lot of cases, it'll be the trend momentum 1 and 2. So again, easy. What are we looking for? We're looking for the cycles to align where the PAI and the trend momentums are oversold together to look for a potential buy, and we want them overbought together to look for a potential sell. Okay, that's pretty easy. Yeah, I want to make sure they're in oversold territory first before I buy, or in overbought territory before I sell. Well, what else does a hook and cross pattern do? Because the time frames cycle within each other, right? You get an hour time frame that cycles around several times before 4-hour cycles, and a 4-hour cycle several times before daily cycles, etc., etc. So this is where this was born and raised with the PAI and hook and cross process. It is the PAI and the trend momentum cross. That's where the hook comes from, PAI hook, and the cross comes from the trend momentum cross. Now, typically, like moving averages and others, the steeper the slope of the hook pattern. So when the PAI hooks, and it's a very steep slope, the steeper the slope, the stronger the move. And when I get a hook and a cross pattern that shows both steep slope on the PAI hook, and I see angle and separation. What is angle and separation? It's when the green crosses above the red, and notice how the gray background, you can see separation between those two lines. So say that again. The steeper the hook, when it hooks, the steeper the slope, and the more angle and separation of the trend momentum cross, the stronger the move. What else does it do for us? When it first starts to hook, this is something that's been in development for a decade plus. I've been updating the same system, but yet new tools, new advances, new everything, but it's the same mentality, the same set of rules, which is awesome. So all you need the PAI to be oversold and start to hook. Once it hooks, you're good to go. That is an entry. Well, since then we came out with the now hook and cross triggers. They dictate when and help you when's a good time for that buy. Well, there's going to be certain market conditions that you'll see, hey, my PAI is starting to hook, but hey, I don't have a trigger. Does that mean, like in this example, does that mean I can't possibly, because I didn't get a trigger here, not enter the trade? Yes, you can enter based on a PAI hook. Now watch the magic. Watch the beauty of this scenario. That, in other words, this PAI on a daily would have never hooked, and I can go through this multiple times. Anytime I see the daily where it was flat and oversold and starts to hook, we'll see what it means across the board for the lower time frame. So you'll notice over here the daily was back and oversold and turned back up, and over here, so there's multiple places where the daily went to oversold and started to turn back up. And notice each time the PAI was oversold and started to hook, this would not start to hook on the daily. This is a euro-dollar example, but the beauty of the software, it works on any market. Whether you're trading Forex, futures, commodities, ETFs, treasuries, cryptocurrencies, doesn't matter. It's still the same. So whenever this is oversold and starts to hook, it would never hook, right? Never start hooking without the lower time frame. And in this example, we're showing the hook starts on the daily. So what's the lower time frame? H4. So in every case, you can see where this hooks. Let's go to the 4-hour. You're going to see in every case we already, and let me turn my auto scroll off, and this is my shift left and right. But once you turn the auto scroll off, that button there, if it's pressed, then every time I try to go back in time and a tick happens, it slams right back to where it was. So you want to make sure you turn that off. Now we can scroll back to find those lines where I was talking about. And notice, every time we had a hook and a cross pattern, the lower time frame had already started with a hook and a cross. Here, this is a little bit later in here. It actually happened a little bit earlier, but you can see when that daily first started to hook, my 4-hour already has a PAI hook and a trend momentum cross. That is money, because it's the only way it happens. You're not going to see this start to hook on a 4-hour unless you have a hook and a cross on a 1-hour. You're not going to see the 1-hour start to hook without a hook and a cross on the 30. You're not going to see the 30 PAI start to hook without a hook and a cross on a 15. Well, Rodney and others, it goes all the way. You're not going to see a 5-minute start to hook without a 1-minute hook and a cross. Get it? So what about a monthly? A monthly down here is not going to start to hook unless the weekly has a hook and a cross. That is awesome, because it's going to help dictate how long we're in potential trades and how long do we let our winning trades run and keep buying dips in an uptrend versus, this is a big push lower. We want to now close and start selling. Well, based on this hook and cross pattern, it dictates how far and how long the preceding time frame will go. So notice, as my daily started the first hook pattern, right, when it first started to hook here, first started to hook here, first started to hook here, we know that the 4 hour has a hook and a cross, correct? We showed in every example, and I could go through every one of these and you'd see the same. The daily does not start to hook up unless the lower time frame, in this case the 4 hour, would have a hook and a cross up. Well, the same is in the inverse. We would never be overbought and start to hook down unless the 4 hour, in this case, would have had a hook and a cross down, or the 4 hour would never hook without a 1 hour hook and a cross down. The 1 hour wouldn't hook with a 30 hook and a cross. The 15 wouldn't hook without a 5 minute hook and a cross. The 5 minute doesn't hook without a 1 minute. So it's every time frame in both directions. Now watch where this really gets interesting. Not only does it tell me that once it hooks, the other time frames in a line, but what about the cross on this daily time frame? Once we hooked and crossed, which again, the PAI is always going to hook first and the trend momentum will cross later. That is by design. So as the PAI starts to hook, what do we know about once I'm in the trade and it's starting to go in my favor? Do I stay in it for a day? Do I go for 10 pips? Do I go for 50? Do I go for 200, 500, 1,000? How do I know? It's based on the cycle. So when I'm in a daily and I start to process with the hook, and my 4 hour has a hook and a cross, then as the daily keeps going, like a day later or so, you'll see the daily now has a hook and a trend momentum cross. What does that tell us? That this up movement's still going, right? So far, so good. So it tells me that once I see the daily with the hook and the cross, then my 4 hour is going to make the full cycle up. So notice what I showed you earlier. The PAI did not hook unless the 4 hour had a hook and a cross. Now you're not going to see where this doesn't hook and cross. So now the daily has a hook and has a cross. So notice in each case, we got a hook and then a cross. We got a hook and then a cross here, and we got a hook and a cross later here. So watch what the 4 hour does. After the daily hooks and crosses, now in every case the 4 hour goes towards overbought. The PAI and the trend momentum go all the way to overbought, all the way to overbought. Look over here, it goes to overbought, goes to overbought. And let's see, I think I have one more to the left here. No, I guess it's back to the right. So you'll see every time is the same, nothing is new, that when my daily hooked and crossed, the 4 hour not only has a hook and a cross, but it engaged, disengaged, navigates to overbought, navigates to overbought. Now let's put that into perspective, Ruben. Because once my daily hooked and crossed, I knew I need to be in that trade for a while. Look, 4, 8, 12, 16, this is several days of trading as the 4 hour stair steps higher and higher and higher and higher. Each time, stair steps higher and higher, and even as it makes its cycle, it turns over to slingshot higher and higher and higher. Awesome, right? Well, how do we know that the 4 hour is going to go towards overbought and say, well, why didn't it go straight to oversold? Why is it doing this slingshot phenomenon over and over? Well, the beauty of each cycle is that that's it. The daily takes days to cycle up. A 4 hour takes a day or so. So you got 4 hour candles, 4, 8, 12, 16, 20, 24, and it takes multiple 4 hour candles for a 4 hour to cycle. The same on a daily. If the daily is going to cycle all the way to overbought, then it's going to take multiple days. But even if it's just going to do here, where the daily depressurizes to slingshot lower, like it did here, it depressurized the slingshot lower. How did I know that this would probably not go all the way to overbought and it was likely to slingshot back down? That's where you look left and right. Like you cross a street, you look to your left, you look to your right to make sure there's no oncoming traffic. Even in New York or a big city where it has a one-way street coming at you, you shouldn't just say, oh, I'm on a one-way and traffic is coming from my right. I only need to look that way, because you step out on the road, somebody going up the wrong way can run you down. Same with trading. So why is that important? Because when I go to my weekly, I can anticipate what it's going to do. Right? I can anticipate what it's going to do based on the status of the weekly. And at the time, you look at when these were turning, the weeklies were starting to turn back over. The weeklies were down. The weeklies were down still before it came and started to bounce after that. But notice at the time in which the daily was showing this, it was already starting to turn back down. It was starting to turn back down. It was starting to turn back down. So basically, the weekly was still grinding and grunting and slingshotting lower and lower, pushing lower to finish its respective cycle. So it's imperative for that at point that my daily would then start to show these signs. Well, why did this get slingshot lower and slingshot lower before now over here starting to climb higher? Because notice as my weekly finished the cycle coming down, we were slingshotting lower. But as soon as the weekly started to turn up, the daily started gauging and disengaging and working towards overbought to then turn over to slingshot higher, right? So far, so good. Look at the weekly. What did the weekly do lately? It's going up. So forget here, we're now over here on the hard right edge. The weekly was going up at that point, so that's why we started to see the daily engage, disengage, and cycle up. So you see how cool that is? So where are we now on the euro? Why do I expect the euro to go a little bit lower to finish? The weekly has a hook and right at a cross. What do you mean by that? Well, Gary, I noticed in this example, the euro was up. The PAI was up, had a slope angle, and a nice little slope here, and we had angle and separation. But as the daily's now moving from overbought toward oversold, the weekly's engaging. That's what you call this process. And don't worry, Rodney, we're going to tell you exactly what a slingshot is. Just keep going. It's going to come second nature. The cool thing is it's all about cycling time frame. This slingshot formation, what exactly is a slingshot formation? It's when the red and or blue, and I mean this dark red or the dark blue, not aqua here, just the red and blue within the PAI, price action indicator. The PAI, that it's when the red and or blue race off and separate from green money flow and then snap back, aka depressurize to slingshot lower, depressurize to slingshot lower, depressurize to slingshot lower. Sometimes you get medium size to large size, to other times you get little insipid size. And all these can be anticipated before they even happen based on where you are in the cycle. So for this example, why in the world would a weekly on the euro have gone from overbought all the way to oversold, and even when it tried to engage to go back up, right, engage, disengage, it still went to oversold and proceeded to depressurize to slingshot lower, depressurize to slingshot lower, over and over and over. And even now it's starting to do it currently, but why would it have done this and all of a sudden stop and start to depressurize again? Check out the monthly. The monthly, when it's down, that's what the daily and the weekly are going to do. They're going to go to oversold and slingshot lower and lower. And in every case, Harold, Gene the pip machine, in every case, it takes longer for a monthly to go from overbought to oversold than a weekly to go from overbought to oversold. And it takes longer for the weekly to go from overbought to oversold than a daily to go from overbought to oversold. A daily takes longer for a daily cycle down than a 4-hour to cycle down. A 4-hour takes longer than a 1 hour. A 1 hour takes longer than a 30. A 15 takes longer than a 5. And a 5 takes longer than a 1. You see, everything always is constantly universal. It covers all markets. It covers any time frame. So why is that important? Because if we know in advance that a cycle is destined to finish, then we know, like in this monthly, as we were starting to hook then cross, months and months and months back when we told the world to sell the euro, it's going down. Down goes Frazier. Howard Cosell. Down goes Frazier. When George Foreman knocked out Joe Frazier. I still remember, I actually watched that fight. Down goes Frazier. Down goes Frazier. Well, when you get a hook and a cross pattern on a monthly, early on, I mean, this is months and thousands of pips ago, when we first started the monthly hook, and then a couple of months later, right, we got the hook and a cross. What did that tell us? So I'm going to remove this one so you focus on the weekly. When the monthly, let me remove this first. Okay. So remember the rule, what we just discussed, repetitive, repetitive. The monthly would not be in overbought territory and start hooking. All right. So when this first hooked, then crossed, early on, months and months and months and months, thousands of pips ago, when we were saying sell that rally, because our time frames were overbought, monthly overbought, weekly overbought, daily. Hey, it's a good time to look for the hook and cross strategy to sell it. Well, check this out. Once it hooked and crossed, which was again months and months and thousands of pips ago, what happened? My weekly had a hook and a cross, but because the monthly hooked and crossed down, it meant this weekly was destined to cycle down. Even if it tried to engage back up, it's going to likely fail and give you the high, the low, the lower high, the lower low, as it engaged, disengaged. Well, Emil, what did I just say a moment ago? That monthly cycle takes way longer than a weekly cycle. So in order for the monthly to go from overbought to oversold, the weekly has to go from overbought to oversold and then start slingshotting lower and lower and lower and lower and lower, right? Everybody get that, right? So in other words, since the monthly cycle takes longer than a weekly, the weekly is destined to not only go to oversold, but once it gets there, start slingshotting lower and lower and lower and lower until that monthly could continue its cycle down. How cool is that? So there's going to be many a times, whether you're scalping, whether you're day trading, whether you're doing investment trading or long position trading, doesn't matter your definition of what you're going to be doing, investment trading, then when I start focusing on the higher time frame, am I interested when my trend momentum and PAI gets in overbought territory for a sell, or am I interested when they get oversold for a buy? You betcha. That's all we care about. We want to align the time frames and then look for our highest probability to buy. Well, notice the color coordination here. Whenever you're overbought, what's overbought? When you're above this red line on both scales, they're a little bit different. This is the 50 line. This is the 80 line. So each one is a little bit different, but doesn't matter. It's overbought when you're in the red area and above. It's overbought when the PAI is in the red area and above, this red line and above. And we're oversold when we're at the green line and below, and when the trend momentum is the green line and below. So all we're doing is very simply saying, okay, we want to align the time frame. Well, think about the work that initially that was. Well, I have to go, whatever symbol I want to trade, I have to go through every time frame and start looking to see where is the hook and cross pattern, where is it? Well, this is why this newer version, as of the years we've increased and made it even more and more efficient, is that now we don't even start hooking unless the time frames are aligned. How about that? Now I don't even have to go to a time frame and look at all my others. That's not required. I know that when I'm oversold like this and start hooking up, that again, it's not going to hook unless the, what time frame we on? Monthly. So if my monthly first starts to hook there, we know what? It's easy. It's easy to say that when this first started to hook down here, that monthly first started to hook, that my weekly already had, you got to turn your auto scroll off, my weekly already had a, and again it's right here off the swing point low, and you say, well, Gary, why are you having to move your line? Because think about it, you have 4 weekly candles and a monthly candle. And even though I moved it 1 candle and a half or 2 candles over to show you where the hook and cross pattern already established, we're still on the same monthly candle. Right? That's pretty easy math. How many weeks in a month? Well, I got 4 of them. But you can see, again, the monthly doesn't start to hook, just even start the PAI hook, unless the weekly already has a PAI hook and a trend momentum cross. Isn't that awesome? Now again, think about the power of this, that when I have a monthly starting to turn up, After my weekly just went from slingshotting lower and lower and lower and lower and lower, why'd all of a sudden it start to engage, disengage, and cycled overbought, then started turning over to slingshot higher and higher and higher a few times? Well, the monthly started to turn up to depressurize before it turned back over as the weekly cycled towards overbought and then cycles back down. So yes, by looking left and right, not only can we anticipate future market conditions, but we also know that based on where we are in the hook and cross pattern, that once my monthly or weekly in this case has a hook and a cross, like here, that my daily has to go to overbought. Once my monthly has a hook and a cross, my weekly has to go to overbought. So you can see in the examples where the monthly hooked and crossed, and this one here where we started to hook and cross, and that one there. This one we didn't really quite cross there, it was more flat. As you can see, this did hook and definitely cross. That one hooked and definitely crossed. This one here started to hook, but we didn't quite get so much of a cross there. But watch what it does. It still influences that lower time frame. And let me make a copy and show you the multiple time when this had a hook and a cross there. And even on this little one that had a partial hook, and you could say, well, Gary, I can kind of maybe see a little green above the red, but clearly it's flat and it doesn't have any angle of separation. I can't see any gray between the green and red, but let's see what the weekly looks like in these examples, right? So I'm going to the weekly, and in every case we have to scroll. So I'm going to go back to the front and scroll back. So in every case we have a weekly with a hook and a cross, a weekly with a hook and a cross, a weekly with a hook and a cross. But what does it do? The weekly grinds and grunts in a laboring rise to make it to overbought. It made it all the way. It makes it from oversold back to overbought. It makes it even in the one where it engaged, disengaged. It went most of the way, right? We kind of, not quite all the way here, not quite all the way there, but even though we didn't have the true hook and a cross with slope and angle separation on this one, where these other ones clearly went all the way, and this one went all the way. So you see what we're doing here? How easy this is? Simply by a monthly hook and a cross. Well, we knew during this rally part of the euro, we talked about that, right? The monthly was oversold, the weekly was oversold. We needed depressurization for this baby to start rallying. So once we saw the monthly hook and a cross, we knew we had weeks and weeks and weeks and weeks and weeks and weeks for the weekly to cycle up. And what did it do for us? It took, and I'll focus mainly on this last one, but it's the same in every one. Let me just take these out. And what did it do? If along the way it starts engaging, what do you mean by engage? Well, we started to separate, engage, and then we disengaged. And then we went on to engage, to disengage, to then eventually get overbought, start slingshotting higher and higher and higher as we keep stair-stepping up. Well, how did we know the weekly was destined to move this direction? Anybody want to guess? That whenever I see a weekly move from oversold to overbought, whether it engaged, disengage, or just straight goes up and starts turning over and slingshotting higher and higher, then clearly during this section here, between this low and this high over here, we definitely have a monthly turning up. There's no other option. The weekly cannot behave this way without a monthly turning up. Well, is that correct? Of course it's correct. This is GPA Trading Services, and this is the Market Price Anticipator software. The best software ever created, if I say so myself. So, what do we have here? We knew months and months and months ago, which is over a year ago on this scenario, that we had a monthly hook and a monthly cross, we had steep slope, and we had angle and separation. But right here, as soon as the PAI hooked and officially had a PAI hook and a trend momentum cross, we knew for, in this case you see it went up for months, but for weeks and weeks and weeks and weeks and weeks and weeks, we were due to cycle all the way for the weekly to finish its cycle. And again, early on, it takes weeks and even months for that to play out. That's why I like fishing down at these higher time frames, so that once I get a PAI hook, I understand that it means this weekly hooks and crosses. Then my daily has to give me day after day after day after day after day after day, cycling towards overbought. And notice this phenomenon that's going to come out later in another upcoming educational video I'm working on, as well as upcoming classes, but you'll hear me talk about this all the time. What is exactly a failed slingshot? It's a price pattern reversal. Okay, well, what's a price pattern reversal? It's where you have a low, a high, a higher low, then a higher high. That's what you call a price pattern reversal. Well, notice what a slingshot does. It's part of that price pattern reversal. When it goes up, it engages and fails. Here's my low where we were starting to hook. Then we rally for several weeks up. Then we start engaging over. And then how did we know the weekly wasn't going to go and make a new low here, like it had done so far, way over here? Why wasn't it going up to slingshot lower, lower, lower? Why is this one starting to engage, disengage, and actually go much higher? Because the difference, the monthly down here was going down, so the weekly should slingshot lower and lower till the monthly finishes that cycle. But over here, while we were rallying up, the monthly was going up. Isn't that simple? Eric, man, that's quite simple. So notice this engage, disengage scenario. You can bank on that. So after I see this engaging down, knowing at the time in which this was engaging down, it was engaging down against a monthly that was going up. Just to give you that view again, so you can burn that in your eyes, the monthly is clearly going up, right, at that point in time. So when a monthly's going up, and a weekly starting to move in its direction and says, okay, I'm going to try to go against that monthly pushing higher, and I'm going to try to climb against that. That's like swimming against the current, right? It's easy to swim with the current, but to swim against the current, hey, I grew up in Louisiana right on the Mississippi, and as crazy as it sounds, as a child, I used to swim in the Mississippi. That's insane. That was many, many decades ago. But that's insane because that undertow in the Mississippi has done it millions of times, sucked things and people under, and it was 50 miles, 100 miles later they finally resurfaced. So I'm like, God, thank you that I didn't get sucked in. But I remember whenever you get in the Mississippi and you were caught in that current, you would get in, swim a minute. By the time you could swim back ashore, if you were with the current, you were hundreds and hundreds of yards down in the direction of the current. So that's kind of like what this is doing here. When I have a monthly hooking across going up and my weekly tries to slingshot against that, more than likely it's going to fail, right? So when this went down and disengaged and we got our little price pattern reversal, low, high, higher, low, guess what else this does for it? The probability we're going to go back to that high and make a new high becomes very high. So whenever I see a slingshot engage and disengage, as it starts to, what is the engage part? Where the red and blue race off, and then the red hooks, blue flattens and or hooks, and green flattens and hooks. All right, well, what is it when it disengages? When the red turns back up, the blue and the green turn back up, but as it starts to disengage. And the probability we see on these higher time frames, well, look, this doesn't look like much on this weekly, does it? But notice where the low was. The low was down at 104. And then, by the time it disengaged to go back up before it started re-engaging, it went all the way. Well, in this case, we were at 104. The previous high to the left of here is at 108. So this doesn't look like much, but Ruben, Rodney, that's 400 pips. And as soon as that disengaged, we knew the probability to go up 400 pips toward this high was a very high probability outcome. And that even not only high probability outcome go back to that high, right? What are you saying here? I'm going to do with the big cursor. So we were going up and we started engaging down. We were going up and we started engaging down. Then it disengaged from a higher low. When you see that, high probability price is going to grind back up, not only back toward the previous high, but in most cases, make a new high. What did we do here? We engaged again, right? This one disengaged later after engaging from that swing point. So as we disengaged and went further up, what should we do? Well, we should go back to this high and make a new high. See how it continues to play out that way? Oh, Man, this is just insane how accurate, and any Star Trek fans out there, the Trekkers, I was a big Trek fan and I like Spock. It's logical. Spock always says it's logical. And he put that Vulcan grip on you, that was good too, but yeah, it's logical. Well, the engaging, disengaging, engaging, disengaging is logical because why? Because what did we already know? Long before this way out, what did we already know further back in time? What did we already know further back in time? Well, right around this area, we knew, right in this area, about right there, we knew that, yeah, we had a hook and we were right at a cross. So once we got the monthly hook and cross, which happened right in this area, what did the weekly know? That even if it tried to slingshot and reverse, it was not going to make it, that it would have to engage, disengage just to finish the upcycle. Why? Because the monthly had a hook and a cross telling us that for weeks and weeks and weeks and weeks and weeks that this weekly was going to go to overbought. How cool is that? Right? So far, so good. Well, how did I know when it finally got up there it would start grinding higher and then turn over to slingshot higher still? Well, again, as we start going further up the scenario and say, well, how did I know that this would likely turn over to slingshot? When this is trying to turn over, what's it trying to turn over against? And when I go to the monthly, it was trying to turn over against a monthly that was still up, 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 up. So we expected the weekly was likely, let me turn my auto scroll back on, was likely to then turn over and slingshot higher so the monthly could finish its upcycle. Amen? How cool is that? So what are we learning with this 4.0 and the overall hook and cross strategy? So what is this going to tell us about the euro? What if the euro engages and disengages? We already started down here. See, we had a low, and then we kind of went up and started engaging a little bit. Then we disengaged. So we had this low, we had a high, we had a higher low, right? Low, high, higher low. And then what happened after it disengaged and turned back up? Well, it was going to go back to that high there and make a new high. Huh. And now it's engaging again. What happens if it disengages? From, look at where the low is down here. There's my 111.11. So we basically got 100 pips still to go before we break a new low. So as long as this turns and hooks out in the coming days/week, then we expect that price is going to go back where, Gary? See the swing point high right there? Where did this latest weekly slingshot start engaging down? From that swing point right there. See it? Boom. Right there. And what is that swing point high? That's my 114 level, 114.12. So Mr. Tucson, what are we learning? That if this disengages from above 111.11, 1.11111, right? Actually, it's 11.13. I think it's the official bottom. Let me get that for you. Official bottom is 111.07, actually, to be the exact bottom. Okay. So, because it's a little bit different platform. One platform might say 107, one might say 111. A couple of ticks here or there is okay. That's just typical brokers. They have a little bit different data feed. So, it doesn't matter which broker I use. What about the MPA PE4 software? It works in any MetaTrader 4 platform. Doesn't matter where the broker is located. It's just a matter of do they offer MetaTrader 4? And if they do, then you can run this software. Okay. So what do we know about this disengaging? If it does, we're likely to go back to 114.12 up here and even make a higher high, aka on the Ichimoku cloud, likely to start grinding toward the cloud area if we get this to disengage. And we know right now, based on the 112 right, and we have a 114 up here, we're looking at least a 200 pip move higher if we can get this to disengage. Well, why does the weekly start to engage, disengage, engage, disengage anyway? Well, we just said it's based on the monthly behind it right now, because at one time we had the monthly hooking and starting to at least engage up. And this is engaging, disengaging, engaging, and disengaging. So what do you think about the euro going up and breaking out to new highs? What do you think about that? I say the euro is no way, no even close probability of going back to new highs. Not only no, but excuse my French, hell no. No way this is going to, even if this cycles all the way to overbought, right? What are you talking about here? Even if this PAI decides, yeah, I'm going to go month after month after month after month after month and go to overbought. My trend momentum is going to cross and go month after month after month after month and go to overbought. What have we learned from history? Back 10 plus years ago, when my monthly started to cycle towards overbought, it couldn't break the trend line. Came back down. When it decided to cycle towards overbought again, monthly cycle up, it couldn't break the trend line. It hit the trend line. Then it comes back down to oversold, and it tries to grind and grunt its way back to overbought, grind and grunt its way back to overbought. And what did it do? It at best could reach the trend line. We come all the way down, we start slingshotting lower, then we do it again. Hey, monthly hook cross, we cycled overbought, and what can it do? Oh, it runs into that same trend line. So now we have a trend line that's been over a decade plus. How do I know it's a decade plus? Well, you just highlight your swing point high over there, and you can look down in this little high-low, open, high-low, close box here, and when I highlight that, you'll notice it says July of 2008, and we're in July of 2019. 11 years we've been making lower highs and lower lows. So now you tell me, is this likely to go all the way back to overbought? And if it does, is it likely to break the trend line? The overwhelming example is this is not likely to go to overbought now because of the previous behavior of engage, disengage. Now, this is something new, Rodney, for you. For everyone else, it's second nature. It's review. It's simply just engage, disengage, engage, disengage. The process of engaging and disengaging and engaging and disengage. Remember what I said about engaging and disengaging to the upside? Well, we're engaging and disengaging to the downside. And notice the same rule. When we first started to hook from this low and made a high, low, lower high as it started to engage up, what did it do when it disengaged? It went back to the low and made a new low. Then what does it do? It starts engaging up again from this low, and then what does it do? It goes up to make a lower high and then ends up with a disengage lower low. So it works in both directions. So now this behavior alone of engage, disengage, engage, disengage suggests this weekly is going to finish the down cycle. Well, Gary, is starting to turn up. Does that mean the weekly's finished the down cycle? Not according to money flow. These red and blue are okay. They made it to oversold. But money flow is barely halfway, a little bit more than halfway, but certainly not finished. And we say, well, the trend momentums are finished. Yeah, but it's both. It's when I get a monthly hooking across down, it means the weekly goes to oversold. Or in this case, the monthly's going toward oversold, not because I have an hourly, right? There's no hourly on here. I don't have an hour time frame that I can say, well, Gary, I see the hour with a hook and a cross. But Ruben, because it engaged, disengage, and engage, disengage, that engaging and disengaging behavior suggests it's going to finish the down cycle anyway. So what am I saying? That even if this were, I'm wrong, and this does go to overbought now, the likelihood we break that trend line is a big fat zero. Got it? So what is most likely? Most likely lower high, lower low, so that it can finish, watch my cursor, so it can turn out and money flow there, green money flow can start moving lower. This is the most unique system you've ever seen because not only has the ebb and flow of what money and buy orders and sell orders are coming into the market, but it also has momentum involved and volume involved. So when it starts to move, that's where the hook and cross pattern comes in, and the more volume and the strength, the steeper the slope and the more angle and separation. So this is not your run-of-the-mill basic indicator. It is far from. It is the most intelligent because it Far superior. It looks left and right. It knows where all time frames are located because it has to, because the PAI can't hook without it and the trend momentum can't cross without it and all these other parameters. But this phenomenon of engaging and disengaging, suggesting the euro is still going to go lower, even if we disengage and go a little bit lower, what's the likelihood we're going to break this low and continue lower? Probably not. We still got hundreds and hundreds and hundreds of pips, just under 1,000 pips to make a new low down here at 103. We're a good 900 plus pips to get there. And even if this disengages to go down, are we still going to get to below 900 pips? So I'm thinking the monthly, even as it disengages, we're likely then to get a whole monthly cycle up, but price is going to be lower down. So when we do finally get this to cycle back up, it's going to be lower down, and it's going to try to run into the trend line. And again, the likelihood it breaks out is exceptionally low. So what happens, as we talked about last time, that as soon as we get our monthly back and overbought, you salivate. Absolutely salivate. Sell, sell. Like Kramer would push the button. Sell, 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 sell. Sell, 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 sell. Sell, sell, sell. Hook and cross trigger. Sell, sell, sell. Hook and cross trigger. Sell, sell, sell. And you say, uh-oh, well, why didn't I get one there? Because that's an actual slingshot. And part of the criteria to get a trigger is the PAI and the trend momentum have to be in overbought territory to get a red trigger or a pink trigger down for sell. And you have to be oversold to get a green trigger or a dark green or light green trigger to buy. See, it forces the scenario. So what are you telling me? How can I trade the euro? The euro, again, still has the monthly, right now, the weekly. That's what this little device is. It's the price action magnifier. The MPA price magnifier. So it tells you what chart you're on, what time frame you're on, what the current price is, and whether you're up or down on here. In this area, minus is red. It means you're down for the week. Or if it would be green, it would be up for the week. And then how much time is left in that weekly candle. So that's why we call it a price magnifier, trader's companion, because it tells you everything you need. So what I'm looking out for is for the weekly to start to turn and hook out. But even though we go lower, no problem, let's just say the euro does go lower and the weekly does finish this cycle and it doesn't disengage. Well, imagine when it's back and oversold and it hooks back out. Even if it did go lower, I'm buying it. You can always buy dailies hook. You can always buy 4-hour hooks. You can always buy weekly, monthly hooks. But certainly an engaged, disengaged slingshot, because that tells me we're definitely going back to 114 and higher by disengaging. Well, let's just analyze the slingshot. Why does this start to go and then slingshot back? Does this weekly decide, well, I'm going to go, let's see, 1, 2, 3, 4. I'm going to go about 5 or 6 weeks and go up. And then, I think this week I'm going to start going back down. It doesn't do that. It's forced to do it. So how do I know that when is this likely to start engaging would be the same reason. If I know that, then I would have a good understanding when would be the ideal time for this to disengage. Well, remember a slingshot anatomy. It's all about the cycling time frames. It's all about the PAI and trend momentum cycle from oversold to overbought, overbought to oversold. The job of these indicators is to cycle from one extreme back and forth, back and forth, back and forth. Well, there are periods of time when your indicators can ride out in overbought territory due to slingshot phenomenon, and times when you can ride out in oversold territory, and I'll do the big cursor, oversold territory for extended periods due to the slingshot phenomenon. Okay? Now, all we need is this to disengage. We have a low, we have a high, we'd have another higher low if it disengages, which means we would go back to 114 up here, another couple hundred pips and some, and make a new high and ramp up toward going into the cloud. All we need to do is disengage. Well, the question was, when did this decide to start engaging over? So let's bring our little handy dandy line here and say when we started this depressurization and then started to turn and engage back over, what is doing it? It's the lower time frame cycle. It is the daily topping over and moving down, crossing, giving a hook and a cross down and cycling down. That is why this weekly is engaging, right? Look, let's go back from the beginning where the daily first started that engaging process, and what? Day after day after day after day, as we started to hook, cross, navigate down, that is what's forcing the weekly to start engaging. What is the definition of engaging slingshot? It's when the red and blue races off from green money flow and then snap back in the direction, right? It hooks and turns. Well, remember, this didn't start to depressurize and move up until the daily moved from oversold over here and went to overbought. Right? So what is the weekly that's starting to depressurize to form the slingshot? It's the daily moving from oversold to overbought. And then when the weekly starts engaging over, right? When it starts engaging over, why did it start to hook and engage over? Because the daily had a hook and cross pattern down and moved from overbought toward oversold. Well, now we're starting to get somewhere. Man, I see that's some grease I can cook with. Man, I'm good. I can go. Well, as the daily's moving lower, that's what forces the weekly to engage. So when's a good time to buy this uptrend when we believe we're going to end up with that higher low and higher high? Not until this daily finishes the cycle, and then turns and either triggers higher or hooks higher. So we can anticipate that in advance. That's why I went ahead and took my profit. Notice, since I took my profit, we would have stopped out. See? I took profit way up here. Look how much lower we've gone. So I took the trade there and went ahead and took the profit because I knew it was going to end up making and taking this trade out. Why? Look at the behavior. The daily going down while my weekly's engaging. Here's the daily going down, the PAI and the trend momentum going down. And early on, it tried to engage up and then disengaged. See it there? It started to engage here, rallied a little bit to disengage. And what did it do from that low when it rallied up? It went back to the low and made a new low. Now it's engaging up again and turning out. Emil, this is what I'm talking about right here. See, we had a PAI hook. Red was hooked, blue was hooked, green was hooked, and my trend momentum was still down. At best, it started to pinch off. But notice it engaged and disengaged once. Money flow's not finished, so the probability that this would engage and go all the way to overbought was low, and the probability that this engage would then disengage was high. Why? Because the hook and cross on the weekly said the daily should finish the cycle, and money flow never finished it. It's still going. How cool is that? So what can we do to set this in our next opportunity to buy the euro daily? It's when the daily finishes its respective cycle, we want to buy the PAI hook back up. So how can I set that? You go to your expert advisor, which in your templates folder happens to be this one right here, MPA Ichimoku Cloud with SAR plus hook and cross trade trigger with the instant order trade management system. Now over the days, weeks, and months, we're going to cover every component, but the primary component of our trade management systems is going to be the instant order. That's the primary one you're going to use. I do have a bracket pending order, I have a breakout pending order, and we have a plain pending order. So there are different ones in here, but the primary one you will always use for specific reasons is the instant order. And I'm going to go through this right now and how we set it. So Ruben and others, Rodney, what we're trying to accomplish is knowing the daily is likely to finish the down cycle and my trend momentums go a little bit more down to finish the cycle. Why are we so adamant the daily needs to finish the cycle? Because my weekly has a hook and a cross right at it. And you say, well, Gary, I don't see the angle and separation down. Well, remember, it's a twofer. What in the world is a twofer, Gary? It's a twofer because we have the month, in this case, the weekly, definitely has a PAI hook. It was up, but it's definitely what? Down. Red's down, blue's down, green's down, and it's hooking down. So even though the trend momentum was up early on, when you're engaging here, you overrule that trend momentum. But as soon as it disengages and you're still up, then it means that we're still up and this should disengage, right? That's part of the process. So what else do we know? Because the daily's moving from overbought to oversold, that's what forced this weekly to start engaging. So it would mean that what's going to force this, or the catalyst to get it to disengage? It's going to be that daily cycle that once it's finished, turning back up and navigating back towards overbought, that's what could force the weekly to disengage, right? So far, so good. So A, I can set my trade management system, instant order, to a daily time frame. Now this trade management system is unlike anything you've ever seen, because the trade management system is very aware of what time frame you're on when you're setting the criteria and setting the trade. So in this example, yes, I'm aware the euro is going to grind up and down like a pogo stick. Bounce up, down, bounce, 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 sideways, sideways to a little lower while we finish that last little bit of the cycle. Now, while I say up and down, sideways to lower, means that if my 15 minutes starts to depressurize and moving oversold back towards overbought, sure, price can go up a little bit, but we're not breaking out. We're going to disengage and continue to the down cycle. So the probability that the daily finishes the cycle is high, because you say, well, A, my weekly looks like we definitely have a hook and we're right at a cross, because we're starting to see a darker line underneath the red, which looks like the green is starting to cross below. But even without this hook and a cross being so obvious, the behavior of the daily is obvious by engaging, disengaging, and engaging. So the probability, as I was saying last week, the probability this is going to disengage is high, so it finishes the cycle. So how do I set the trapper? You go into your Expert Advisor, you right key click on the chart, you go to Expert Advisor, Properties. Now don't let this scare you at first. You go, holy moly, that's a lot of information in there. Why, oh why, what is all that? It's simple. It tells you how many lots you're going to trade, where your stop loss, take profits are going to be. Then we have, and this is new in 4.0, the use of the 2 or 3 fractal in our equation. We'll get to that at another time. Then a entry criteria filter, break even +1 filter, etc. And we go through use trade trigger long, use trade trigger short, use slingshot long, use slingshot short. Do I want a position, scalp, or optimized trigger? Do I want to use my take profit triggers? What do I want in here? Well, right now, let me move this to the left so everybody can see the market behind us, that what we're trying to accomplish is this daily, because it's engaged, disengaged, engaged, and now turning and hooking back out, the probability we go down for another day or so is high, aka so I can finish the cycle. So I'm going to tell my smart instant order trade management system, okay, when my specific criteria is met, I want you to buy the euro. And the bias is I want to buy the euro regardless if this keeps making lower highs and lower lows, or when the daily gets oversold, goes back to overbought, and we rally back up to the previous high. Either way, I want to buy the daily when it's oversold. So how do I set that up? I'm going to use 2 or 3 fractal. Again, just leave those true. One thing when we do cover this, you never turn both to false. You always leave the 3 fractal true, and in some instances you want the 2 fractal true. Some instances you may want the 2 fractal false. Again, we'll get into that, but never use these. Just basically leave this 3 fractal true and the 2 fractal is a true or false depending on the circumstance. Most of the majority of times you leave both true. Now, entry criteria filter. This is something we'll go over in more detail, but it's telling me if my indicators like the PAI and the trend momentum are facing down like this, see how it's hooked down and this is still down. If I say entry criteria filter to true, the system's going to know that on this week daily time frame, my daily's headed lower. So if I tell the system I'm going to click the button and say, I want to buy right now. I want to buy you. The system's going to say, no, you can't. You can't buy unless the daily has a hook or a slingshot engaging, but you need to be oversold turning up to buy, or you need to be engaging up to buy. So this system is built in to tell you, no, you don't trade. Well, why do I have that beautiful criteria false? Because there are times after experience knowing when this engage, disengage scenarios occur that all I want to do is buy it when it's ready, even though it's not perfect conditions where my daily is totally hooked, crossed, and all parameters are there. I want to buy it as soon as it's oversold because I think it's going to rally back up. So right there, I simply go use trade trigger long, yes. I want the trade trigger to fire for me to get in a long position. So right there, use trade trigger long is true. What about a trigger short? No, I don't want to sell a trigger right now. We're talking about the daily getting oversold, needing to depressurize back up. So I want to buy, in this case, only a long trigger. I don't want to sell anything short. And what about a slingshot long? Well, it's possible this daily could go on, push lower, engage, disengage again like it did over here. So I'm not really interested in buying a slingshot right now because with the weekly going down, the daily engaging up is likely to fail anyway. It'll still make profits, so don't get me wrong saying, well, if I try and do a daily slingshot engaging up, I couldn't possibly make some profit. You can, but it's not going to go and break out to new highs. It's going to end up with a lower high and a lower low. So we call that phenomenon buy the hook or trigger and then sell the slingshot back down. In this case, buy the hook, sell the failed slingshot. So what else do we have? Well, what about a slingshot long? Again, I just said no because it's likely to fail. I'm going to say false. And what about a slingshot short? We're already moving lower, so I'm not interested in a slingshot short until we finish the cycle. So now I basically have the trade management system set, and I set it to where, and generally Euro 25 pip stop loss and take profit it's okay. I sometimes go a little bit more on the Euro between 25 and 50. And then my take profit 2, I'll double that up, say 100, and take profit 3, I'll go up to the 200. Now think about why we're doing this. A, this is what I love to do. I over-explain and explain and explain to everybody and then somebody, everybody understands. Nobody's left behind. So by engaging and disengaging, the probability we're going to grind in an up, down, pogo stick, sideways to lower method is still high. But once the daily's back oversold, now what? I want to buy it, right? Even if it turns out it's going to rally to slingshot lower again, I still want to buy that hook. So we're telling it here, only thing we want to do is buy a trigger long. See it? The only one I got, use trade trigger long, is true. The trigger short is false. The slingshot long is false. The slingshot short is false. Any position, any trigger is good, whether it's position, optimized, scalper, doesn't matter the trigger, anyone is good, so I leave those true. Then take profit trigger. Take profit triggers fire along the way as your indicators start getting deeper and deeper and overbought. They start firing these yellow triggers or arrows to tell you, hey, look out, we're about to get a reversal. Look out, we're about to get a reversal, right? So I usually turn that off when I'm expecting to pick up 50, 100, 200, 1,000 more pips. If I'm simply scalping for a matter of 5, 10, 15, 20 pips, then I can leave my take profit trigger potentially on. But if I'm going to let it run for weeks or even months or days, whatever, to run for several hundreds of pips, I generally set this to false. The good news is it's so interactive, friendly, that even if I have my trade that's running along the way and at first it's false and the active trade is running, I can later change it to true, and then later while it's still running, it'll then take my profits later. We'll get in all that. So now that I set, the only thing I want to accomplish is understand the daily by engaging and disengaging. What do you mean? Engage, disengage, engage. Now it's turning and hooking back. We call that disengage. So this is likely to finish the cycle. Amen? For two reasons: because of the behavior of the current time frame is likely to finish the cycle because it's already engaged and disengaged, and engaged the second time and now disengaging. But also the weekly has a hook and right at a cross, which means the daily is going to finish the cycle anyway. So that's what I mean by the twofer. My weekly hook and cross pattern saying the daily is going to finish the cycle, and my daily engaging and disengaging suggests it's going to finish the cycle, which really tells me I want to buy it once it's finished the cycle. So that's what this does. Use trade trigger long only. Watch how easy this is. All I do is say, okay, data has to tick to this, and then what? I press the button. Boom. Ready to trade. You're done. James, what is the only requirement now? The requirement is I don't change time frames. Why? Because now that I change time frames, it knows I'm not on the same time frame. So yeah, I could buy the 4 hour here. I could. When this gets oversold and scalp it back up, sure. But the 4 hour is not likely to go all the way to overbought. It's likely going to come down, depressurize the slingshot lower. Now, how in the world would someone, they say, no one knows the future, no one can anticipate. Well, everybody else is too worried.
Me, I'm intuitive.
Everyone out there in this industry talks about predictions. They predict this, they predict that. My prediction is this, my prediction. Well, where I come from, predictions are left to the prophets. And ladies and gentlemen, I'm a nice guy, but I'm not a prophet. What I am is an intuitive, anticipating individual. So what the software will do, we don't predict, we anticipate. And the software, based on this engage, disengage, right here on the 4 hour. You telling me it engaged and disengaged, and is this cycle finished? No. Is that finished? No. So what's the euro likely going to do? Up, down, pogo stick, sideways, sideways to lower, while it finishes. So Gary, if I click this now, it's going to buy the trigger up, but it's going to do it on the 4 hour, not the daily. Well, is that a bad thing? No, because the 4 hour is a great scalp. But as I said last time when we did the 4 hour buy, and we just got pipped out, see it? We bought it over here, triggered up, made the profits, took profits along the way, and as we were coming down and getting pipped out for more profit, I closed it at the beginning of class saying we're getting close to stopping out anyway for more profit. I'm going to go ahead and lock in that profit because my daily engaged, disengaged, knowing it was going to stop us out. I anticipated that in advance. Well, look at the 4 hour engaging and disengaging. That suggests it's going to finish the down cycle. Well, what about the daily? The daily has a hook and a cross because it's already hooking back down and my trend momentum's still down. So I have a daily hook and a cross, even though it's a fresh one, right? It was up and it's a fresh one. Now that it's hooking back down, that's a fresh hook. And we're still got the cross down, right? Trend momentum 1 and 2. So the probability that the daily ends up going oversold all the way is high. And even the 4 hour engaging and disengaging finish the cycle is high. So yes, I could set it on a 4 hour, but this one is not likely to then go all the way to overbought and start breaking out to potentially get the 200 pips. It's going to be when the daily finishes the cycle. So what can happen? While my daily goes down another day or two, finishing the cycle, the 4 hour could trigger higher to slingshot lower, so the daily finishes the cycle. Remember how the daily cycles from overbought to oversold. The 4 hour has to go from overbought to oversold, and as it's doing it, then starts slingshotting lower and lower and lower because the daily takes so much longer to cycle. So what do we have behavior of the 4 hour? Previously, it was moving from overbought to oversold and slingshotting lower and lower. Now it went back to overbought and it's doing what again? Moving back to oversold. So what do you think it's going to do once it gets there? It's going to turn to go back up. Price is going to go and start rallying, but it's going to turn and go back up to slingshot lower and lower, like over here, so that my daily can finish the cycle. Okay? So either one is fine. I can in fact set one on a 4 hour to scalp that one, and then later have a second one set on the daily to buy that later. What's the only criteria? The criteria now would be if I'm going to run two back-to-back trades on the same currency pair, euro dollar daily and another euro dollar 4 hour, then I'm going to need to change the magic number in the second chart. So the first one has a magic number of 100. And if I open a duplicate chart for the euro dollar and I want to have a second euro dollar chart running, like set one on a 4 hour, set one on a daily, then the first one I would set with the 100 magic number, and the second euro daily chart, how you do that? You'd go File, New Chart, open up a new euro dollar chart. I'm not going to do it because I have so many open already, but you would open that up. Well, let's just do it real fast. We open it up, we go to our templates folder, we go back to our Ichimoku Cloud Hook and Cross Trade Trigger Instant Order, and the default automatically is going to set it up at the same 100. That's just the default. So in here, I change it to the 4 hour. And for those of you that may not be that familiar with MetaTrader, MetaTrader is the most widely used platform globally, hands down. And when you open a new chart, when you have multiple, it ends up opening at the very end. So I'm going to move that euro dollar by simply clicking and dragging it toward the front. Now I need to scroll back to where my other euro dollar is so I can place them side by side. So you grab the tab and then you just slide and drag till I get to where my euro dollar is. And we're not quite there yet because again I have numerous charts open for teaching purposes. So as I finish this process, I'm just basically open a second euro dollar chart. Now you can see with the big cursor, I have a euro dollar chart daily and I have a euro dollar chart 4 hour. Everybody see it? Daily, 4 hour. Daily, and we just set that based on the criteria, Expert Advisor properties, that we were only going to take a trigger long and nothing else. Got it? And any type of trigger. So I'm good. And here's my daily. And you have to have the tick data again for it to populate. Now I'm going to click it. And it says ready to trade. So what does that mean? That means whether this takes a day or two, or how long it takes to finish the cycle, then to trigger higher and hook and cross trigger higher, then it'll enter the trade for you. So that's that one. And remember, we set the magic number right there, magic number, which is up here, magic number. Let me do the big cursor. Magic number is 100 in the daily chart. Cancel. So we need to go to the 4 hour chart and do the same thing, right? So now we're going to go in here, Expert Advisor, Properties. And we want to basically duplicate what we had in the previous trade. Well, we're going to do the 50. And we're going to do the, well, this one we could actually do a little bit less. Let's do the 50, well, let's do 25. Because again, the 4 hour, when it finally finishes and triggers higher, yeah, I want to scalp that, but it's likely to go up to slingshot lower so the daily can finish the cycle, right? So this one I'm going to say, well, we'll do 25 pips this time. Stop loss, let's do 25 pips. And my take profit 125 pips. My take profit 250, and let's just say, just in case we do decide to rally, we'll make that 100. And now my magic number needs to go from 100 to anything other than that, say 101. Now the trade management system knows whether I have one trade running on a daily or another trade on the same currency pair running on a 4 hour. It'll be able to differentiate which one it needs to follow and manage. So this is critical that you have a different magic number. Only when you're duplicating the trade on the same symbol. Got it? Okay, so magic number's been changed. Now we want to go back and do the same thing. All we want to do is buy a trigger long, same on the criteria for the 4 hour, and I'm going to show you why in just a second, which you should already understand, but if not, I'll review it. And say we want that to finish the down cycle and then buy that dip, but I want to take aggressive profit. That's why I'm going with a tighter stop loss and tighter take profit than the daily, because the daily is expected to go up as much as 200 pips, where the 4 hour may only go up 25, 50, 75 pips or so. Got it? So I'm doing exactly the same thing. Trigger long, yes. Trigger short, all you do is double click on the true and it drop it to false. Slingshot long, nope, Don't want to buy that either. Slingshot short, no thank you. I want to simply buy the trigger long and that's it. Any trigger is good, position, scalper, optimized. And what about take profit triggers here? Well, I generally leave it false, but I could turn that to true. And even if it's false and the trade starts, I can later change it to true, and we're good to go. So you see it? Difference is I have a different magic number and we're on a different time frame. Okay? All right, say okay. Now what do we need to do? All you got to do is click it. Wow, boy, that's a lot of labor intensive, isn't it? Simply push the button. And this means that on the daily time frame that says ready to trade, that it too is going to fire up, but not until we get oversold and trigger higher. We can't trigger higher without being oversold. So the inevitability of this trade is still high. And what if this daily starts to do like this? It goes down and doesn't come finish the cycle and re-engages again and goes up and goes all the way to overbought. It's not going to enter the trade. And it comes all the way back to oversold. And then it triggers higher. Well, we would go up and then eventually come back to oversold and then it would trigger higher. So whether it does it now or later, which is most likely to be in a couple of days to trigger higher for the daily, I want to buy it. But even if it went all the way back to overbought, then back to oversold, I'll buy it again. Right? So now I have the daily time frame ready to trade with magic number 100, and we have the 4 hour ready to trade, same criteria when the 4 hours finishes the cycle. Well, why do I want the 4 hour to buy that one? But I want to take more aggressive profits because the 4 hour is not likely to reverse and start breaking out. The 4 hours likely when it finishes and turns back up, it's likely to depressurize to go up, but then slingshot lower again. So the daily finishes the cycle. Well, why do we think the 4 hour is more likely to finish the cycle before it turns up? Because it's already engaged and disengaged. Got it? So definitely look for the euro to do a lot of pogo sticking today. Up, down, sideways, sideways to a little lower. But as soon as we get to oversold territory and we trigger higher, I want to get in and start scalping. And the system will do it for you automatically. Fair enough? Now let's switch gears and pull up a trade that is currently running. Let's see, I think I have it in this one. Bitcoin. Bitcoin is running. Yes, even this trade management system can tame the beast they call the Bitcoin. We nailed that baby going up, and we're taking profits and taking names on the way down. Simply by using the what? Hook and cross strategy. Now, Ruben, Rodney, this ought to just literally blow your mind. Remember what we talked about? Swing point high, swing point low, price pattern reversal failure, and that if we see it go down and engage up, then disengage. The probability it's going to go from the engage up, disengage, the probability it's going to go back to the low and make a new low is very high. Why you think I'm still in it? Because we have a hook and a cross, started the process down, then we engaged up to fail, high, low, lower high, lower low, price pattern reversal, high, low, lower high, working on the lower low. So you tell me, ladies and gentlemen, we came close there where I took my profit and we're reversing to go further. We should go to this low and make a new low. But Gary, why didn't you think Bitcoin is going to go much lower and start to tank all the way to zero? Because again, I have to look left and right because I'm about to cross a busy highway. And what is that? Trading. So my busy highway says by engaging and disengaging, the probability we go down for several more days is very high. Doesn't mean I can't have a daily green candle in there where the daily actually rallies a little bit. But what is it most likely to do? Is this daily going to reverse and go up and engage up and go to reverse and this is going to cross up? Or because we engage, disengage, we're more likely to finish the down cycle for several more days. we're going to finish the down cycle for several more days. A, because the daily engage disengage suggests it's going to finish the down cycle, but even a double whammy says look at the weekly. The weekly has the hook and the cross pattern. It's got a nice slope and it's got a little bit of angle of separation. So Rodney, Ruben, Alan, Bitcoin's going lower, my friend, but is it going to go back to these lows, or is it going to make a higher low, higher high? Well, what is my weekly trying to turn over and do right now with the hook and cross down? This right now says the hook and the cross says that daily is definitely going to finish the down cycle because of a hook and a cross, correct? What did the daily do? Well, the daily was following instructions. It started to plummet, but then when it tried to slingshot back up, should it fail or succeed? Because the monthly, in this case the weekly, has a hook and a cross, not only should the daily start to depressurize and move to oversold, but if it dared try to slingshot back against you, you start salivating going, great, price is going the wrong way, and the further it goes the wrong way, the more I want to sell it, aka when this engages and then disengages. So I sold this based on what? The daily engaging up. I went to my 4 hour and I said 4 hour, I know the daily engaging up, but it's engaging against a weekly hook and a cross down, so the probability this engaging slingshot fails is high. So when do I want to sell that? I went to my 4 hour and said, okay, 4 hour, when you get back to overbought, sell it. When you get back to overbought, I want you to sell. And that's what this trade is. Now, it has to tick for the trade management stuff to come back and start monitoring, but it has to finish that cycle. That's why we're selling. And this rally up is likely to what? Slingshot lower, lower, lower. Why on a 4 hour? So that my daily can finish the down cycle. Get it? So I'm going to let this baby run, and the likelihood we come down and probably reach take profit 2 is still very high probability. And check it out. Never saw that. Say, wow, I'm up 138,500 pips. So you can tell your friends, hey, when I trade with the MPA PE4 trade manager, I end up making hundreds of thousands of pips. They'll think, God, you must be a trillionaire. Well, in this case, depends if you're trading micro, mini, standard lots. But yeah, it's still making money. Lots is good, the number of lots, but the pips are better. So it doesn't matter if I make thousands of pips or hundreds of pips or a few pips. Depends on the number of lots we're trading. And you see what we're doing. So the bias is what, Ruben? The bias is what, Eric? Rodney? We engage, disengage. So what's going to happen over the next several days? We're going to grunt and grind lower, increasing our profits. We'll be in the several hundreds of thousands of pips. I've already take profit 1 right here. It did it itself. I set it. I didn't touch it. It took its profit. It moved my stop loss from at risk into no risk. And it's ultimately going to end up moving this process further down as it continues to go. So you say, well, Gary, in this case, I took my take profit 1, but I'm interested in break even plus 1. Well, if you want to do break even plus 1 and move it, it'll automatically do it. Or when it reaches take profit 1, it moves it. So it's good to go. So what about take profit 2? I think it's going to continue down, because why would I take profit 2 now, knowing that it's likely going to finish the cycle for a few more days? So I think it's going to start to run and start moving toward the cloud. If you've never used Ichimoku Cloud before, with these indicators and these cycles, it's magical. Because notice as we start going down, Ichimoku says if I'm above the cloud and I start moving down toward the cloud, then I should act at least as support, at least initially. Well, what do you think it's going to do if we can get Bitcoin to drop down a few more days, finish the down cycle, have the daily oversold starting to turn back up, and it's on the cloud? It's going to bounce. So I closed my long trade. Now I'm short, and I'm going to look to close the short trade once we get down toward the cloud and my daily finishes the cycle. And then I'm going to close that trade and go back long, because I'm expecting the bounce to go back up. But what's screaming at us is not only is the weekly hook and a cross telling the daily is going to finish the cycle, But look at that monthly. Man, oh man, this is Jimmy Neutron in a jetpack. Remember what I said? The stronger, the steeper the slope, and the more angle and separation, the stronger the move. That is vertical, my friends. So what is the probability that a monthly that is so strongly up, steep slope, angle separation, trend momentum 1, angle separation, trend momentum 2, smoking to the upside? What is the probability the weekly is going to turn over to slingshot higher, like over here? Higher. That's exactly what it's going to do. The probability of weekly turning over against a monthly up, the weekly gets to slingshot higher. What do you think the monthly was doing over there? Going all the way to overbought and slingshotting higher and higher itself. But check it out. When Bitcoin made that huge rally, and you remember I called that beautifully too as well. Why? Because the monthly was still in overbought territory at the time when we got this big massive rally, but we started to slingshot higher and higher as expected, but we started the process with the weekly. And we had weekly slingshotting higher and higher. Right? And the dailies continue to move from oversold to overbought, and then slingshot higher and higher. So we just kept buying the dips, buying the dips, buying the dips, as this is expected. So the same thing is setting up again. Monthly still smoking up, but Gary, you're short. Are you out of your mind? You going against a monthly that looks like that? No, I'm totally in my mind. I'm totally in control of my faculties. Why? Because the monthly is up right now, but remember the lower time frames cycle first before the higher time frames. And every time I see a weekly that's overbought, turning down and moving lower, of course you're going to get the weekly to start moving, but we already have a hook and a cross down, right, Emil? There it is. There's the hook, there's the cross. So I'm not interested in buying this at all, other than an intraday kind of scalp would be, yeah, I'm interested in buying it when my daily gets oversold. I'd like to buy it. But until then, I want to stay short, because the weekly hook and a cross is demanding this daily finish the cycle, and even if it tried to engage up, it would fail and still finish the down cycle. So definitely look for Bitcoin to stair step lower towards our daily time frame Ichimoku cloud, and that's why I have my take profit 2 sitting somewhere around there. And then once the daily's over and finished, which is days from now, then I'll look at closing this trade and then reversing to buy it to go to the opposite direction. Well, if I wasn't in Bitcoin, I simply wanted to say, well, I'm going to let it go down. I want to buy my mindset is I want to be long trades. I'm not so in short trade. Well, that's the beauty of the marketplace, and a lot of them, you can go short and long in the Forex market easy. Well, stocks and futures options are a little bit different. You got to buy puts instead of calls to go down, or you sell, which is not always a good idea. Just tell your broker, hey, I want to sell these stocks. It's better to use options on those. Anyway, it's personal preference, but you get the point. Well, in this, you can just buy and sell just simply by letting the system sell when it's overbought and letting the system buy when it's oversold. How cool is that? So, what are we learning about 4.0? 4.0 comes with multiple, and I'll do it again to show everybody. Up here on your toolbar, we have these little icons. The first one is the Market Watch. So whatever MetaTrader platform I use, I can trade any symbol that's located within this Market Watch. And that's why we use so many different ones. This teletrade, notice in your members area, I added the teletrade because it's got a lot of cryptocurrencies. In case someone in our group would like to trade cryptocurrencies, you can do so here and get the signal to know when I should be buying it or selling it. And whether you trade it in the platform where the signal is, or you say, okay, Bitcoin, I want to use a ETF on Bitcoin, or I want to use some other method, then you can do that as the financial vehicles are available. So when I say, okay, gold, we're going to get to gold in a minute, now it's time to buy or sell gold, I don't have to necessarily do it through MetaTrader 4. I can sell gold through ETFs, through, you name it. Options, I can, variety of different ways, or just do spot gold. All right, so within the market watch, again, any symbol you can add the software to by simply finding the symbol of interest, adding it to a chart, or simply right key clicking and going to chart window right there. And when I do that, it'll open a new chart, waiting for update, and then opens the chart. Then I can go to my templates and add my template, and man, I'm good to go on any symbol, anywhere, anything I'm interested in trading. Okay, what about US 30? That's the Dow Jones. Oh, what about the Dow? What's the Dow likely to do? Well, looking at what it's doing right now, just a 1 hour, but let's go through the process. My 4 hours where? Overbought, starting to depressurize. Right? Overbought, starting to depressurize. It's engaging and disengaging. So what's the likelihood this is just going to go ramping up without some sort of jawboning or the Fed saying they're cutting interest rates or something jawbone? Sure, this could go up and just slingshot right away. But by engaging and disengaging suggests this is going to start to, as I like to call, fizzle-manizzle. It's going to start to fizzle-manizzle going higher and start to move sideways to lower while we're depressurized. Well, is it going to go just the 4 hour? Is the daily going to get involved? Right now, the daily is flat to up, hadn't hooked and crossed yet. But what if I see this Dow show in the next couple of days, the daily hooks and crosses? Then I know this 4 hour is definitely, without question, going to go all the way to oversold. Then I could buy it and scalp it back up. What about the weekly? The weekly's still up, definitely deeply overbought, but at some point we're going to get a hook and a cross down. So watch this, Ruben. Watch this, Rodney. Back when we had this, as we were talking about buy the dip in this pullback, we knew we were going to pull back because the weekly had a hook and a cross. We knew we were going to pull back until the daily finished the cycle because the weekly hooked and crossed. So then we said buy the daily when it's oversold and buy and get back in. Why? Because the weekly is still up. Yes, it's overbought, but back here when it hooked and crossed, we said go ahead and buy that slingshot as soon as the daily gets oversold, because the weekly said hook and cross down, the daily had to go to oversold. Guess where the daily went? Guess where our daily went? It went to oversold, and then what? Triggered higher, boom. So during that period, why did this start engage, disengage, and finish the cycle and then slingshot lower? You can see I can keep stripping the time frame and do the Ron Popeil slice and dice schematic. I can slice and dice all these time frames and continue with the same process. Why did we know when this daily started high, low, lower, high, lower, low, lower, high, lower, low, engage, disengage, it was going to finish the cycle? And then once it finished the cycle, why would it go up to slingshot lower as opposed to this cycle go from oversold to overbought, then slingshot higher and higher? Watch the difference between the lines and the right side here, the in between here. What's the difference on the weekly? Well, on one of them, the difference is the weekly's going down between the line versus to the right of the line, the weekly's now up. Harold Glenn, it makes me such joy and excitement to continue to bring you the best software every time I bring out a new release, a new upgrade. Now this new system in 4.0 is so efficient that we're going to have updates more frequently. Not a bad thing, it's a good thing because it's learning. It's getting better and better and better. Every time I give an upgrade, it's better than what you previously had. How cool is that? So notice, what is it likely to do? It was going to trigger higher. Why? Because it was expected to turn over and reverse back up. Well, why would it have done that where here it started engaging and disengaging and went all the way to oversold, but then instead of going up and slingshotting lower and lower and lower, it did the reverse and went up to slingshot higher and higher? Well, you remember what we just did here on the daily? And we said, you know the difference here between the daily and then the right of this line? What was the difference? The weekly was going down here, and then the weekly's going up there. So when the weekly's going down, the daily engages, disengages to finish the cycle. Then as it starts to depressurize, if the weekly's still down, it's likely to slingshot lower. Well, why did it then turn and hook and change directions? Again, the weekly reversed. The weekly started engaging and eventually hooked and crossed back up. There you have it. So the daily did what now? The daily now reversed and not only hooked and crossed and went overbought, but as it tried to engage, it disengaged. And what does it do when it engages and disengages? It goes back to the high and makes a new high. It turned over to slingshot higher and higher. Well, why is now, let's move these further out, why were these now when they were turning over? And in both examples I'll just use here, why, when these were starting to turn over, we expected it to slingshot higher? Well, when my the daily here starts to turn over, where's the weekly? It has to be up. Gene, the pit machine. That weekly has to be up when this daily starts turning over and is forced to slingshot up. It's because the weekly's still up. So guess what we're going to see here and here? And between the two lines on the right side of the line, weekly still moving up. And what do we see? Weekly still moving up. See how cool that is? Awesome. So it doesn't matter what I trade. What do we need to do here? Well, we know that this Russell, for us right now, we're looking at the Dow and the S&P. I'll show you in just a second. Both of those are getting ready for a little bit of a pullback. What do you mean by pullback? Not a, Elizabeth, I'm coming to join you, honey. Here comes the big one, Fred G. Sanford style. But it's just a pullover to buy the dip. Why? Well, we will know how long we're supposed to go for the dip, like we did in these examples. When the daily hooked and crossed, we knew the 4-hour would go to oversold before cycling up. Well, what if we get the weekly in the coming days for the weekly to hook and cross? Just like the last time it hooked and crossed. Now I'm going to move my line back to where the weekly was hooked and crossed there, and I'm going to remove this one. Just like the last time the weekly hooked, then crossed, what did the daily do? James? The daily engaged, disengaged, but made it cycled oversold. Then even slingshotted lower because the weekly was still going. How cool is that? So you see the point. So we know that at some point the Dow, the S&P, etc., that are overbought. Why overbought? Look at the daily. Trend momentum, PAI, overbought. Weekly. Trend momentum, PAI, overbought. Monthly. Trend momentum, and you say, well, I don't see much here. Yeah, I just opened this platform recently and just started getting some tick data. But it doesn't matter. The monthly's still in overbought territory, and before price starts plummeting, you're going to get the daily to hook and cross. You can get the weekly to hook and cross before the monthly starts to hook anyway. So that doesn't matter. So all we got to do is look for the weekly. Once it hooks and crosses, know that I'm not buying the dip until the daily gets back to oversold. And when the daily gets back to oversold, I set the pip trapper to buy it. Amen? Well, Gary, again, why did we know when this started to depressurize there and there it was going to slingshot back up? And what happened in that case, right? What happened in this circumstance? My daily's trying to depressurize against a weekly that's still up, so yeah, it should slingshot higher. But when do we know? Why does the daily go for a day or so, a few days, and then all of a sudden go day after day after day? Yeah, I think I'm going to engage back up. And this one, I'm going to go a day, a couple of days, and I'm going to engage back up. Why did this one engage here and this one engage sooner and a little less time? It's all about the 4-hour cycle. It's all about once my 4-hour gets oversold. Why the 4-hour? Because we're talking about a daily hook and a cross. Once my 4-hour gets oversold, I want to buy it once it triggers back up. Very simple. Once it gets to oversold territory, I'm interested in buying it back. Well, notice this never really got fully deeply oversold like this one. This one did trigger higher. This one didn't quite trigger because we didn't quite finish the cycle. Sometimes you get a trigger, a partial trigger, sometimes you don't. Well, what do you do here? Well, even though I didn't get a trigger, when I saw it start to turn and hook, I enter the trade anyway. Why? Because it's hooking and crossing, and we have the process of a weekly still up and a daily depressurizing, so the 4-hour is likely to go back to overbought and even slingshot higher, then go back to oversold as the next daily slingshot forms and then goes back up. So what are we saying about slingshot? Slingshots are a precursor of the hook pattern. Because Ruben, You have to hook to form a slingshot up, and you have to hook from oversold to form a slingshot down. So it is the precursor to our hook pattern. Hook pattern is a precursor to a potential slingshot. And knowing when you hook and cross, the lower time frame finishes the cycle, what does that do for a scalper? Well, when I use a 4 hour like this and it starts to hook here, that tells me that I have a 1 hour hook and a cross. But it also says the lower time frame of the 1 hour hook and a cross, the 30 minutes should go all the way to overbought. So when the 4 hours oversold and just starts to hook, we know the 30 minutes should go all the way to overbought because the 1 hour has a hook and a cross. So when I start scalping this right away, I know I shouldn't close the trade until at least the 30 minutes overbought. But then as I'm in the trade and it's starting to grind, I come back later and say, well, my 4 hour did have a hook, but now it's got a hook and a cross. Now that 30 minutes should not only go to overbought, but now the 4 hour hook and cross means the 1 hour should go to overbought. So I stay in the trade to keep scalping it while the 1 hour finishes the cycle. Got it? And what if I get my 1 hour overbought, my 30 overbought, and I come back, my 4 hours still up, but I go back and say, well, where's the daily at this point? If the daily is straight down with a hook and a cross, then it's time to take those profits and look for another pullback. If the daily is still flat to up or up and up, then the 4 hour is likely to then slingshot higher again, right? And finish the cycle. So there you have it. That's why the hook and cross pattern is the precursor to the slingshot phenomenon, but it's also the follow through of the hook and cross pattern that dictates the time frame cycling. So we don't predict that once I get a hook and a cross on a 4 hour time frame, even if it's in this case, the Dow index, futures, Forex, ETFs, treasury, cryptocurrencies, stocks, commodities, that doesn't matter. When you get a 4 hour to hook and cross, the 1 hour goes to overbought. When you get a 1 hour to hook and cross, a 4 hour to hook and cross down, the 1 hour goes to oversold in the highest of probabilities. Is there ever an exception to the rule? Sometimes it can engage, disengage, and re-engage and actually move higher before it finishes the cycle, but the overwhelming majority, I don't mean 51% overwhelming majority, I mean upwards of 90. Sometimes 85, 90, 95% or more finish the cycle. And that's all you can ask any system, to give me a high probability outcome with an easy, repeatable entry criteria. And this is the repeatable and as entry criteria as it gets. I don't trade unless the foreman in the workforce, we said that in the beginning of class. Well, Rodney, what's the foreman in the workforce? The foreman is the 4 hours, the gatekeeper, it's the bellwether. It controls the time frames, the lower time frames and the higher time frames, like the foreman. I nickname it the foreman as well. And it'll also align the time frames to coordinate with the higher and the lower. So when my 4 hour PAI hooks up, the lower time frames are automatically in agreement because the 4 hour is not going to be oversold turning and hooking up unless they are. Harold, that's awesome. Amen? And then once it hooks and crosses, the steeper the slope, the angle of separation, the stronger the move. But do we know it's going to depressurize the slingshot lower, or do we know it's going to finish a cycle? Again, that's where the higher time frame comes in. And if at the time in which that my daily is still up, you say, well, Gary, that's flat, and that's still slightly up. It's not the steepest of slope, angle of separation, but it's still flat / up and up, or flat to up. Then the 4 hour still has the potential to turn over to slingshot higher, right? But what happens if my daily ends up hooking and crossing? Then we know this 4 hour is going to go all the way to oversold, and I wouldn't be interested in buying it until it is oversold, then I buy it. Well, right now, we don't have the daily with a hook and a cross, so it's possible the 4 hour could end up re-engaging. So in this one for the Dow, how would we set that one? This one's a little bit different than the other one. Just for an example, is that the same scenario, well, 25 pips on a $2,700 plus $27,000 deal here is way too small. So minimum, I would put 500 pips, like $5 move minimum, or even more, maybe even say 1,000. But it doesn't matter what I put initially. 500 will work. Well, actually, it works on the S&P, so we probably need to do about 1,000 on the Dow. I hadn't done the Dow in the last little bit. 1,000, 2,500, not 25,000, 2,500, and 5,000. Okay? Well, why that? Because you're talking a different indice, or in this case, index, so your PIP profile here needs to change accordingly. And that's based on the broker. When you highlight over, it'll tell you what their lots are and what each value is, kind of give you an insight to that. But if you left that 25, 25, 50, when I tried to place the trade and it activated, it's going to give an error message saying that your stops are too close, your take profits are inaccurate, because it's going to be on top of each other based on this expensive stock price, or in this case, the indice. So that's all I got to do is adjust that accordingly. But what's the same? It's exactly the same as the other. We want to buy the trigger long and nothing else. Do I want to trigger short? No. Well, initially to sell and scalp this, right? We could do that, but ideally we think the 4 hours is going to finish the down cycle, or when the daily hooks and cross, the 4 hours definitely going to finish the down cycle. So I'd like to buy this, but right now, since the daily hadn't hooked and crossed, this 4 hour could possibly slingshot back up. So in this example, we could say buy the trigger long, trigger short false. What about a slingshot long? Yeah, I could potentially buy that because the daily hadn't hooked and crossed down. If the daily's hooked and crossed down, then I would say, no, I don't want to buy the 4 hour slingshot back up. I want the 4 hour to go to oversold before I buy it. But in this example, the daily has not hooked and crossed down. So I want to buy the trigger long, or I want to buy the slingshot long. I don't want a slingshot short. And it doesn't matter position, scalp, or optimize. Any trigger is good. Those will always be true. And what about take profit trade? Generally, when I'm trying to make multiple pips or for a period of time, I save that to false, but again, that can be changed while the trade is running. Now that we're good, what do we need to do? Now, based on this right here, what does it tell me? Well, Gary, I think we're missing something, because you're telling me I want to buy the trigger long, so that means this 4 hour right here has to go all the way to oversold, and my trend momentum has to go to oversold before it can trigger and cross back up. Then yeah, I need it to get to oversold. Well, why are we saying potential slingshot long? Because right now it's not a given. The 4 hour is definitely going to go all the way to oversold. It could re-engage here because the daily is still flat to up. So I could say, okay, either buy the trigger long or the slingshot long, and say, okay. Then we say good, and I close this so I can see my screen. And then what do? How difficult is it? I click to drag. Now, what does it mean? If we do get a trigger to fire short, which we're kind of already moving out of that area, part of it anyway, if we get a trigger to fire short, will it take a short trade? No. Why? Because I just told it not to. Everybody say it? I just told it not to take a short trigger. False. So that means I'm going to cancel because I already have it ready to trade. That means, yes, we could set it to maybe scalp lower while the 4 hour is moving, or we could wait for the daily to hook and cross and then scalp it down and know the 4 hour is going to grunt and grind its way all the way to oversold. Or in this example, just ignore the idea that this sideways overlapping price, I'm not so much interested in selling it as I am buying the dip. So once the 4 hour engages or finishes the cycle to trigger, I want to get back in. Now, what if we start engaging versus going all the way to oversold? If I engage and get in, I need to take more aggressive profits than if I go all the way to oversold, then trigger back in. Why? Because if we go all the way to oversold and trigger back in, we got a lot longer to get back to overbought than we do if we just slingshot when the trend momentum's already overbought. Well, is it worth buying this? Sure, slingshots are always worth buying. But just remember that because the daily and the weekly are overbought as well, this is unlikely to keep slingshotting higher and higher and higher multiple more times. It's more likely going to start working its way back to oversold, but that's why I'm setting it this way. It's your personal preference, but that's the key. So this is what we're going to reference in the future, setting the trade management system to join the time frame cycle. We're setting it either to engage up or finish the cycle and trigger up, on this 4-hour because we expect to get a higher low and a higher high in the coming weeks and months. Fair enough? All right. So let's do a few more symbols and we'll call it a day. I know it's been a little bit, well, if I go through every symbol, we'll be here until tomorrow. Let's look at the S&P. S&P is also an exact same similar boat as the Dow. When you go to the software, whether you're looking at the S&P, the NASDAQ, all of them are in these different platforms. And here's the S&P. It's doing right now, it's already got something nobody else has. What? It engaged and disengaged. Bank that. What do we do here? Well, you got to go to your expert advisor to say what's going on here. And it's a good thing because if I try to sell this right now with just 25 pips on a $3,000 deal, that's not enough. So I'm going to make this 500, 500, 1,000, 2,000. Just not to say it's necessarily going to go that far, but you get the point. Put something in there. And once you're actively on a trade, I can click and move my stop loss and take profits anyway, manually on screen programming. So what are we trying to accomplish here? Well, we got a trigger up here. We already engaged, disengaged. Can I sell this? Yeah, I can sell it. And so does it matter if I go through all this right now? All these can be true right now because all I'm going to do is go say, okay, and I'm going to click to trade and then click to sell. Instantaneous. Now it placed the sell trade right away. That's what I mean. I clicked it to ready to trade. Now you have the option instantly enter a buy or instantly enter a short. Notice where the stop loss is. It's still a little tight because the last swing point is there. I like to use the previous swing point. Notice when I move it, it locks it back into place. So if I wanted to move my take profit 3 and say, well, I think this is going to go all the way to oversold here on this 4-hour, and I think we got a good chance for price to come down, I can move it further just simply by clicking and dragging. See it? I can move it down. Whoops. What if you mess it up like that? What if I click? Whoop. Let me do that for you. What you see the little dotted red line? If I try to grab that and move it, it's not going to move until I highlight it. Once I click this, you got to see the little dots on there. Now I can move it. Sometimes I'm going to try to move it when I see it like that. I'm going to try to move it and it grabs the red line. Everybody notice? The red line is attached. So when I let that go, it pops this open and go, well, wait, that's not what I wanted to do. So your cursor has to be a little bit below to move it. Or when you have that highlighted, a little bit above to move it. And it'll keep you away from that line. That's just an FYI. So I can move this intraday, I can move it. What if I have it way up here and I say, well, it's going to bounce off the purple line and I'm going to put it down here. But as it starts breaking the purple line, it's still gone. So, well, no, it's going to go further. Don't let it hit, or then you just move it, right? And it instantly moves it. Fair enough? So why do I want to be short right now? Because we have engaged, disengaged slingshot, and we have a high, a low, and a lower high. So Emil, what do we know about engaged, disengaged? Rodney, you're an expert now. You joined, and it's the first class. You've been in with me for 2 hours, and you're an expert. So Rodney, what do we know about engaged, disengaged? Price is going to grind and go back to the low and likely make a new low. So where's a good place to place my first take profit? Certainly right at that low, because it's going to make a new one. So if you want to move it up a little bit, it's 500 plus pips to get there. That's pretty close anyway. And then my take profit 2 and take profit 3. Well, notice the new system has 4 green lines. The old one, it didn't. I like the 4th one I put here just to reference where your entry point was. So this one stays. It's got a little diamond on it. And then the other 3 are your take profit 1, 2, and 3. Well, Gary, what if I forget about what you just said? All you got to do is hover over it. And you'll notice the little box says TP1. I don't know if you can see that when you get home on the video tonight. You should be able to see it. It says TP1. When I highlight that one, you just kind of highlight over, it says TP2. See it? TP2. And then this one down here, TP, whoops, you got to get off the Ichimoku, but get off, let me move it so it's away from the cloud. And then when I hover over this, it says TP3. If it'll give it to me, come on. There it is. Well, it actually says TP because that's the last one. TP1, TP2, TP3. So again, on-screen program, I move it where I want. If I think it's going to go big time and I can have it way down here and say, yeah, the S&P and the Dow and all going to crumble. They're absolutely going to crumble to dust. I can move it way down thousands of points. Well, this isn't going to go down thousands of points right now. Not until the market crashes, which is not ready yet. So we don't need to bring it that far down because we believe it's going to end up bouncing to make a higher high. But does it come to the cloud to bounce? Does it come to the purple line to bounce? So this is a good area where I can potentially put my take profit to and say, what if it does come toward the purple line to bounce off of and I'm oversold at that point? Then it hits take profit 2 and bounces. Well, what if it doesn't and I end up hitting take profit 2 and it was still going? Then I'll look for it to make a move toward the cloud and put my take profit 3. Once it's done, we're good to go. Well, now we're going to be in a negative trade for a while because your bid and ask price forces this to be a short trade. That's part of paying the spread. That's why you're at a negative right now. But what is it likely to do? Because it's engage, disengage, right there, engage, disengage, it's likely to finish the cycle even if it decides to come back later to engage and disengage. And what does engage, disengage look like? Over here. Engage, disengage, engage, disengage, engage, disengage. So is it possible this could engage, disengage, engage, disengage, engage, disengage, but finish the cycle? Sure. Or it can just give very strong down move and don't slingshot back up, but finish the down cycle either way. Highest probability. This is going to be a good short trade. It's already less than 110 now, down to 85, and we'll be starting to go positive soon. But the bias is this is going to cycle down, so I want to take profits accordingly. See how easy this system is? This is the primary trade manager. So whether you like Ichimoku Cloud or not, here are the two primaries I want to call your attention to. I prefer the Ichimoku because of the reasons I stated. When you get oversold, you're either going to be at the cloud, at the line, at the purple line, at the purple goal line, or when you're above, sometimes you're above, sometimes you're below. It's not whether, well, what if I'm breaking the cloud here? Do I still take my hook back up? You betcha. But it's showing where potential support zone is, aka former resistance over here is now support. So as it was coming down and we were oversold, we were likely to bounce off of there anyway. That's how you set the pip trapper to buy and join forces. Fair enough? So the other one, as I move my over here, is if you don't want Ichimoku, I have it down here and it looks exactly the same minus Ichimoku Cloud. Okay? But I prefer it, so I use it. But you have a plethora of templates. Any template is good, and all of these new templates will pull the newest data and ask and require you have the latest indicators and expert advisors. So there you have how easy it is. We're going to go into the parabolic power plays and the platinum Asias and some of these other things I made because I added the trade management system to it. And then you'll notice further down we do offer the pending order trade management system. We order a bracket pending order and a breakout pending. So these are the primary you're going to use. The most one you're going to use is the instant order. For certain reasons I use bracket, other reasons I use breakout, and we'll go over those at another time. But the same hook and cross pattern, everything is identical in all of these, and we'll go through that as we go through all these components. So in the interim, what's the bias? A lot of up and down, down, pogo stick, down, pogo stick, with a tendency to go sideways to lower, and this should play out over the next several hours. Okay, let's continue. Let's go to, let me go back in this and navigate to from S&P to Black Gold Texas T. Black Gold Texas T has been stair-stepping lower minus this latest uptrend. And is this latest uptrend over, or are we going to go a little bit more before flipping back over? Well, first thing you need to do is go to the software. And currently, we're in this trade that's still got a hook and cross, and we're right at it. And well, Gary, I've been in this trade for a few days now, and I've been up, I've been down, I've been up, I've been down, I've been up. Notice we're currently up and we haven't taken profit. So if I just want to end this, all I got to do is click to close the sell. Why click to close sell? It's red because we sold it. That's how it'll say click to close sell. If this was green, that means we bought it, so it would have a click to close buy if I wanted to close that. Or I can just move to break even +1, which we're close to a stop loss, but I could still do that and say, okay, I want to make it to where this trade can be a winning trade without becoming a losing trade. What would I do? You click break even +1. And yes, this is part of an older trade that was already running. So it's already where I want it to be. So that's why. But you can change that when you're ready and then do a profit trade. Or you can just absolutely close the trade. So when you hear this tune,
Great job. We're very proud of you here at GPA Trading Services. We wish you much continued success. Bravo.
now, why would I close it? Well, we were close to reaching our profit level. And yes, it's probably going to go a little bit lower, but I just showed you I didn't close it because I think black gold is definitely soaring to the moon. No, we got a hook. And right here, Mr. Tucson, if we come back today at 5 o'clock, why 5 o'clock? Because the get a new daily candle. If I come back today at 5 o'clock Eastern and I get a new daily candle here and I see the daily has hooked and crossed, everybody pay attention, we see the daily has an official hook and a cross. Right now we got a hook, we just don't quite have the cross, but if we end up with the hook and the cross, then I know that this 4 hour is definitely going to engage, disengage, and finish the down cycle. Well, it's already engaged, disengage, and remember the behavior is very similar to that disengage, disengage is going to end up disengaging anyway and finish the cycle. So I just closed that not because I thought it was going to get stopped out. I closed it to show you that your on-screen programming is there for your convenience. So if I think this is going to engage, disengage, and finish the cycle, what is it likely to do? Well, the daily turned over to slingshot and the daily's depressurizing again. Is it going to slingshot higher, or is the daily going to go from overbought to oversold? Overbought to oversold. Which one's it going to do? Well, to get some insight to what it might do is you first look at the weekly and say, well, what's the weekly doing? Right now, the weekly is up, but it's up, right? PAI hook. Trend momentum cross, not the steepest of slope. It's starting to change angle and flatten out a little bit, but it's still up and it's still crossed. Well, what is this aqua line I see? It's not part of the price action indicator. It's the price action indicator oscillator. It's the PAI, but it's the PAI oscillator, and the red, blue, and green here is the PAI. Well, what is good as the oscillator?
Congratulations. You have achieved the #1 goal of trading. Relax. You are now at break-even +1. Enjoy your no-risk trade as there is only additional reward remaining.
Now, so when you're asking the question, you're going to get that scenario is going to wear you out. Congratulations, you reached the #1 goal of trade. It's going to wear you out in a beautiful way, increasing your bank flow and your bank account, the money flow in your bank account. So, what is this likely to do? Well, we started engaging and disengage, turned over to slingshot higher. So is black gold really likely to keep going week after week after week after week after week and then keep going slingshot higher, higher, and higher? Or is this more likely to turn from like this? It went from a slingshot down to a slingshot up and could either disengage by turning and hooking out, or go to a slingshot up to a slingshot down, similar did it with here. It went down to up. This could go from up to down. But what is the likelihood of engage, disengage? Did money flow here finish the up cycle? No, that's why it started to slingshot back up, and it's still trying to go towards overbought, but we're nowhere near a new high. So more than likely this is going to disengage, end up with a lower high and a lower low, as opposed to black gold, Texas T, the Beverly Hillbillies going to break out. Well, what would help us is to know where the monthly's located.
And the monthly, and you say, well, Gary, there's not a whole lot of data, right? And I can show you it on another one, but the monthly's already engaged and started to disengage, and it's the red's starting to turn back up. But what does the engage disengage suggest? By engaging up and then disengaging, the probability we make lower highs, lower lows, lower highs, lower lows for months and months going through 2019 into 2020, and this is more likely to start stair-stepping lower, is greater probability than this keep going much higher, right? Because we engage, disengage once, and when we do that, it's likely to start stair-stepping back down toward this low. Well, my weekly is still up at the moment. That's why the daily is still potentially eligible for turning over to slingshot and might even slingshot higher again, but is it likely to keep going and slingshot higher, 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 and higher over and over and over and over and over and over when the weekly looks like that? Probably not. Because again, we started the process with engage, disengage, engage, disengage. Then it turned over, it hooked and crossed. But now it's turning back up and it hooked and crossed back up. But its original engage, disengage never finished the up cycle. And even after this engage down, engage up, we still quite aren't finished. So that's why I think, yes, we might get a little something more up, but not a breakout. Lower high, lower low. And I can't wait for the weekly to turn and hook out. So your homework, yes, I said homework, is to keep a keen eye on this weekly crude, black gold, Texas T, WTI, cash, doesn't matter which one it is. If they're similar, I'll show you crude, etc. It's just depending on the broker and how they title their symbol. But this is most likely going to disengage more so than it's going to keep going up. So what do we know about a weekly slingshot engaging down? What has to happen? And what do we know about a weekly slingshot engaging up? What has to happen? The daily has to go from overbought to oversold to force it to engage down. Then the daily has to go from oversold back to overbought to force it to engage up, right? Everybody with me so far? We need the daily to go from overbought to oversold to get it to depressurize. Then we need the daily to go from oversold back to overbought to get it to engage. Well, what do you think we're going to need the daily to do to get that weekly to disengage? The daily is going to have to hook and cross and then navigate back to oversold. Navigate back to oversold. So what do we want to do here? We want to go back to the expert advisor for black gold Texas T and say, well, looking at this, I have every reason to believe that we should still go lower. Even though right here we engaged up and didn't make a lower high, we made a higher high. That's okay. But what's the problem? It made a higher high because the weekly's still up, but the weekly's starting to lose its momentum in the daily, the 4 hour, etc., back in overbought territory. So what do we need to do here? We can do our take profits, etc., and as you go through, what am I trying to accomplish? Well, I think because we're starting to hook and cross and the 4 hour engage, disengage, the daily is ultimately going to hook and cross. So I basically just want to get in right now and sell it. So I say, okay. And then it ticks. And then, well, Gary, why'd you just get out if you're getting right back in? Because I'm showing the system. And remember, it won't populate until you get a tick data. So it might sit here for a minute sometime if it's a slow market hours and it's not ticking for this to show up. Now that it's showing up, all I got to do is click it and then say right away, click to sell. Boom. Why? Because I have a hook and right at a cross. And you say, well, Gary, I don't see the cross. But why did we want to go ahead and sell that? Because my daily is hooked. We got a trigger saying to go ahead and go. We got the hook, we got the trigger. We just don't have the hook and the cross. But what's the likelihood? Probability we can end up with the hook and a cross. High. Why? Because I say so, or because you see signs and symptoms that would warrant so. AKA engage, disengage, money flows just right here. That means it's likely to engage, disengage, and finish the cycle, which means I want to scalp that down till at least finishes the cycle. Then what happens when I come back and I'm up and I see profit and I see my 4 hour oversold? A, I can come back and press the break even +1,
Well, what happens if I press break even plus 1 right this second when I'm down a couple of pips? You're going to hear the new encouraging statement that says, make certain your PAI and trend momentum, so we're going to say in that, we're going to say make certain your PAI is at extremes hooking before you enter the trade, and then follow the hook and cross strategy. Okay? It replaced the old recording that talked about aligning the porpoises in alignment. That's just that was referencing our live event we had in Maui for our platinum members. So that was just part of it, but it's all the same. Whether I refer it to align the porpoises, align the time frames, hook and cross pattern, hook and cross strategy, the engage disengage scenario, going engage disengage, turning from a slingshot down to slingshot up, the probability that this cycle of the 4 hour was going to go to overbought was very high, because at the time in which this started, the daily was up. And why is this engaging and disengaging like this was engaging and disengaging going up? Why is this engaging and disengaging expected to finish the down cycle? Because the daily is turning over and moving down. Got it? So now that we're up, what happens if I take profit now? Then it would, hey, lock you out and take your profit. What if I move it to break even plus 1? It's going to get pipped out right away because you're only up 6 pips, which is 6 pennies or less, and that would easily just a little tick and we could get stopped out, or in this case, if I move my break even plus 1 into profit, it takes this at-risk trade to no risk, but I need to give it some room to negotiate into profit territory so that it can breathe, go up and down, and still continue. Right now it would be too soon, but I could close the trade immediately and do what we just did a minute ago and make profit. Yeah. But the likelihood that this disengages and finishes the down cycle for several 4, 8, 12, maybe another day is still good. That's why I want to let it run. There you have it. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. I know we didn't get a chance to cover all the normal symbols we always do, so we can do it tomorrow, as well as you can go in the archives. So this is a question for you, Rodney. Is it important I attend live class? Every minute you get a chance, because we're setting the pip trapper for great trades that are setting up, an explanation of why. Well, if I'm unable to, is it worth me going back to look at the archive? Absolutely, because we're talking multiple time frames and we're setting up trades that are in for trades when I talk about 6 months ago. Some of those trades are still running because we had the monthly, the weekly, and the dailies all involved. And otherwise, what good seeing if it's a day later or hours later or 2 days later? It's always good because it depends on where the hook and cross strategy is. If it's the daily, the weekly, and the monthly, then you get days and days, you get weeks and weeks, you get months and months. So yeah, it's worth going back to view archives. But again, this engage, disengage, it's like clockwork. It's going to end up, we call this paint the PAI. In this case, we're going to call it paint the MPA. Premium, or I'll say the whole name. We're going to paint the Market Price Anticipator Premium Edition 4 version 4.0 software Picasso. What does that mean?
Congratulations, you have achieved the #1 goal of trading. Relax. You are now at break-even plus 1. Enjoy your no-risk trade as there is only additional reward remaining.
Wow. Which ones are getting in? Is it in this platform? I got so many platforms set. I think it's maybe this one. Let me see. Let me see where all those. Oh, and I got some great stocks for you. Ooh, before we go, and remember I said I was ready to go, and I'm going to finish my spiel, and I'll tell you goodbye again. Several stocks are setting up for stock traders. FedEx has a monthly, deeply oversold, a weekly, deeply oversold, starting to depressurize. It already engaged, disengaged, which suggests it's going to that high, make a new high. What did it do? It engaged, disengaged. So that was a couple of days ago, or actually a couple of weeks ago. We grinded back to the high and made a new high. Well, guess what? It engaged, disengaged suggests that this weekly could engage, disengage, but the behavior of engaging and disengage suggests it wants to finish the up cycle. Plus, if my weekly is going to start finishing the up cycle, what's the likelihood we're going to end up seeing this monthly start to hook and cross in the future? Yes, that's exactly what you're going to see, and we're already deeply overbought. So keep an eye on FedEx to buy the dips in the uptrend. That FedEx will start moving higher. The monthly is going to end up hooking and crossing, and which means after that, this weekly is going to go week after 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 week, and look at the trend momentum, week after 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 week higher, and we're going to grind up probably in toward the cloud. Well, what do we also know already? We got a weekly hooking across. See the hook? See the green above the red? You say, well, that isn't the steepest of slope, but it's still a hook and across. So what do we know, Rodney? We know that the weekly hook and across equals the daily going all the way to overbought already, and we're moving that way. But notice when it engaged down, what was it going to do? Finish the up cycle. So buy the dip. Buy the dip. So what's next? The daily is going to turn over to slingshot again, so I'm going to buy the next slingshot and the next slingshot and the next slingshot. And as the weekly goes week after week after week and FedEx keeps going higher, so be it. The other one is Freeport-McMoRan. Freeport-McMoRan monthly is in oversold territory, having engaged, disengaged, and finished down. It's oversold, oversold. Look at the big cursor. Oversold, oversold. Does that mean it couldn't go possibly a little bit lower? Sure, because the weekly's starting to engage. But hey, what if the weekly disengages by going down and fails? Then as soon as this engaging slingshot disengages, I'm going to buy it and go long and expect price is going to go back to this high and make a new high. Plus we'd have a weekly with engaged, disengaged, suggesting we're going to get weeks and weeks and weeks and weeks and weeks further of upside, which ultimately would mean my weekly is going to eventually hook and cross back up. So that's Freeport-McMoRan setting up for big rallies to the upside. We got FedEx with the monthly and the weekly being deeply oversold. We have DuPont with the monthly being deeply oversold, starting its process, getting ready to turn, getting ready to start grinding. So what's a sign the monthly that hadn't quite hooked yet officially? Well, red's flat, green and blue are still down. Well, what do we need for this to start officially hooking? We're going to get the weekly that is engaging over to disengage. And when this disengages, we're going to go back to the high and make a new high, but engage, disengage suggests the weekly is going to keep going, right? And this is likely to force this to turn, so DuPont's setting up for some upwards movement. Alcoa is setting up for some upwards movement. Again, monthly's deeply oversold, starting its process of hooking, and my weekly already has a hook and a cross, which all we needed to do is already has done, engage, disengage. There it went up, started engaging, and then disengage. And now we're going to go back to this high and make a new high, and the weekly is likely to, week after week after week after week after week, grind higher. So what do? We use options, and we buy about a 6-month option, or in this case, about 6 months. Maybe not that long, but why not? Because the monthly can get involved and it could last more than 6 months, but 6 months is plenty of time to get it started. It might be a little bit more expensive than buying a 3-month option, but I think this daily is going to end up engaging and disengaging for weeks to months, as my monthly is in the process of being a hook and a cross coming. And why do we anticipate, not predict, but anticipate we're ultimately going to see in the coming month a hook and a cross? Because of that previous destined behavior of engage, disengage. So is it 1,000 trades that we engage, disengage, 1,000 that this is going to finish the upcycle, 1,000 out of 1,000? Possibly. But no, not every one. This could engage and then come back, re-engage, and ultimately turn over and go down. But we need to see signs of that happening. And until then, the bias is with the monthly starting to hook and getting ready to cross, and the weekly engaging and disengaging. The percentages this engaged, disengaged, but goes to overbought, and the trend momentums go to overbought over the coming months is very high. So what's an opportunity to start looking for? First price target is going to be the purple line at $26. And then when we break the purple line and keep going for weeks, we're going to start targeting the cloud up here, which you hover over it, and my big cursor's in the way, but you hover over it,
and say, what if we start, the price reaches this area up here? Come on, give it to me. It's around $31.40. So $26, then $31. For Alcoa to go up over the next multiple months? Exactly. And what's the probability it's going to do it? Well, once the monthly officially hooks and crosses, then it's a far-going conclusion the weekly's going to finish the upcycle. In the interim, because it engaged, disengaged, and we're already at the process of starting to make that price pattern reversal. Low, high, higher, low, higher, high. We're already in the process of engage, disengage, which its behavior suggests it's going to finish the upcycle. Sure, it might engage, disengage again. Kind of like, let me see if I can find a decent one on this pair. Let me turn the auto scroll off and go back in time and say, when was the last time it engaged, disengaged on the way up? Like over here. It starts to engage, disengage, engage, disengage, engage, disengage, but cycle up. Everybody see that? I'm going to get the big cursor involved. We got the low, we went up, and here we have a low, we got a high, we got a higher low, we got a higher high, a higher low, higher high, higher low, higher high. And what happens when you engage and then disengage? You go back to the high and make a new high. Then when you engage and go back to the high, make a new high. Then you engage, disengage, you go back to the high and make a new high. Then why did we turn over slingshot higher and higher? Because the monthly was up. But could this currently take on that similar behavior by engage, disengage, engage, disengage, but yet still cycle up for the next several weeks and months, and the next several weeks and months the trend momentum cycle up? Yes, because of the behavior alone, and soon to follow because of the dominant ultimate hook and cross pattern on the monthly, which means the weekly is going to go to overbought. So there are 4 stocks. Repeat: Freeport-McMoran, monthly bottoming; FedEx, monthly bottoming; DD for DuPont, monthly bottoming; and AA for Alcoa, monthly bottoming. So be prepared over the next, not necessarily, well, I better get in this trade 2 seconds from now. No, we're talking this is going to last for weeks to months. And if I'm going to do a option, because I don't want to spend, say, $7,300 on buying 100 shares and letting this rally. Well, if you got that kind of money, fine, do it. If not, you can get in for a few dollars by buying options and say the options, for options, look for this call options to go higher. Where should we start targeting? Start targeting the levels like I mentioned off the weekly. I would start targeting the $26 and I'd start targeting the $41 up here eventually. And I know we're on DDD now, so in DDD, the first target will be the purple line at 74.55, so you got another $1.20 coming. And then we start targeting the platform up here, or the cloud up here, which is sitting at, come on. Sometimes you hover, it gives it to you. If not, how do I, there it goes, come on. I moved it right when it was ready to do it. $81.73. Now you got about $8 more. All we need to confirm we're likely to go up that $8 is we need this weekly to disengage. Why? Because the weekly engaging and disengage suggests the weekly is going to go week after week after week after week higher. And that behavior suggests we're going to get our hook and cross on a monthly. So yeah, I would start targeting those with potential call options and allow this to play out over several weeks. Fair enough? So when's the ideal time to buy? When the daily is engaging over, when the daily goes back up. And the daily is engaging up, but I'm not convinced that DDD necessarily is going to break out right this second today, because why? We did engage and we did make a new high there, so it's possible we can engage and go on and make a new high, but the behavior of the same engage, disengage, and turn to slingshot higher and engage, disengage, and then turn back suggests that we may not be the breakout just yet, that even if it did, I'd welcome this big time. Well, Gary, you said that this potentially is going to go up and I want to start buying call option. If I give the call option several months out, it doesn't matter if this goes down for a few days and this disengages. Or I can just wait and say, okay, if this daily disengages, then the likelihood that this is going to go all the way down for a few more days is good. Then when the daily's oversold and triggers higher, then I buy my call option. Get it? And even if I buy a call option for 6 months out, in 2 days it rallies big time, I can close that trade instantly. I don't have to wait 6 months. No. But you want to give it time because the daily's likely to disengage. If it does do that, welcome it. Salivate and go, wow. Welcome and salivate. For those of you that are new, I use the term Pavlov's dog. It's a psychiatry where in the studies they would put dogs in a cage, and every time they would go to feed them, they would ring a bell, and then the dispenser would put the food down and the dog would start to eat. And he'd hear the bell and the dog would go eat. Next day, hear the bell, the dog would go eat. Hear the bell, the dog would go eat. And then all of a sudden, after the conditioning behavior of bell, I salivate, I know I'm going to eat. The bell would go off and there would be no food. And the dog's salivating, thinking, well, that's conditioned behavior. Well, Emil, if this disengages, Rodney, if this disengages and ends up going lower, I'm going to salivate while price is going lower so that once it's oversold, I'm going to really be ready to buy it from a better price. Should this start to disengage, then I set the pip trapper to buy it, not until we're back in oversold, or I wait for my PAI and trend momentum to get oversold, and I manually buy the hook. Either way. I can't guarantee that this is definitely going to disengage because the last one did break a new high, so this one could break a new high. But even if it did, it's still going to need to depressurize, and I can buy the dips in the uptrend. But I would not be shocked if this did disengage, but I would start salivating so that when it got oversold, I'm buying it big time going up because my weekly's oversold getting started, engaging, and potential disengaging, and my monthly's getting started turning. So this is a great time to start buying with call options to give this days to weeks to even months to start playing out. And watch when we come back months from now what happens. And worst case scenario, well, what if it doesn't play out exactly like expected? Then you're going to get hook and cross patterns the opposite direction, knowing that this is not going to go to overbought. It's going to slingshot lower and turn over. But what forces a weekly slingshot to start engaging down? It's the daily. And if my daily is up, then what's the likelihood that that weekly is going to slingshot lower? Impossible. It can't until the daily hooks down. It has to hook and cross and then start navigating from overbought toward oversold, overbought toward oversold in order to do it. Notice the weekly here. The weekly was going up there. It didn't start flattening and doing until after hook and cross. Then what did it do? It failed. It's supposed to, right? Engage, disengage, engage, disengage. Where was money flow? Halfway. Money flow wasn't finished. So what was the likelihood this was going to turn over to slingshot higher? Very high because the weekly is up. So there you have it. So those are 4 stocks to throw in your mix to keep an eye on for future weeks and months. Upside potential on, one more time, Freeport McMoran, FedEx, DD for DuPont, and AA for Alcoa. And with that, God bless you. May the pips be with you. I'm humbled and honored. Join us again tomorrow as we continue. But as I always end and say goodbye, remember the rules. We always circle the wagons before we end class. All we need to do to keep it simple is we need the PAI and the trend momentums both oversold together before we think about buying, or both overbought together before we think about selling. And then, based on the hook and cross strategy, tells us how long this trade should grind higher, or if it's more likely to slingshot lower, so I buy the dip, sell the slingshot, or do I buy the dip and look for buying the dip in the uptrend because this is definitely going to go more to the upside. Bias is it's going to go more to the upside. It might engage, disengage, like we showed you over there, but it's going to end up finishing the cycle because of its behavior already, and it will be absolutely confirmed coming soon once the monthly officially hooks, which we're doing, starting to, and then crosses. Look where green and red are. They're on top of each other, so it won't take a lot for the green to cross above the red there,
and we're already beginning the hook process of the PAI. And what does a monthly hook and a cross equal, Emil? It guarantees highest probability this weekly is going to engage, disengage, or just cycle week after 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 week, and I'm going to be in this trade week after week after week after week after week as it climbs higher. First target, purple line because it's in the way. Next target, cloud. So that was 26 and then 41. So take care. God bless you. We'll see you tomorrow.